very quickly. Euro dollar 101.85. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden on Wednesday will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. Former Secretary of State Henry Kissinger is warning President Biden against endless confrontation with China. The man who helped re-establish U.S. ties with China in the 70s spoke in an interview with Bloomberg News editor-in-chief John Micklethwait. Kissinger said that geopolitics today requires, quote, Nixonian flexibility to help diffuse conflicts between the U.S. and China. The House has passed a bill that would recognize same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. And in the UK, the largest trade unions threatened to strike after the government offered below-inflation pay raises. The offers cover about 2.5 million doctors, teachers, and other public sector workers. One union called it another kick in the teeth for the National Health Service. For the first time, Cathie Wood's ARK Investment Management has pulled the plug on an ETF. Wood is closing her ARK Transparency ETF, which launched at the end of last year. The fund gained only $12 million in assets since inception, a fraction of the $9 billion in Wood's flagship fund. It was a rare, passive vehicle from ARK. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
look, Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The 50 basis point increase will be among the choices on the table when we next meet. But it's not locked in.
It's not locked in. Andrew Bailey, the Bank of England governor, it's never locked in. Then all of a sudden, a newspaper article comes out 2 days before the decision and tells you what it's going to be before it comes out.
Does he have a fragmentation theory?
Maybe a little bit.
Are they arguing fragmentation?
I don't think they've got a fragmentation tool. Lucky him that he doesn't have to worry about that. Tom, futures down a third of 1%. I want to check in on the euro. Euro dollar negative 0.4%. We've got a turnaround here. 101.83. We had a little bit of euro strength, dollar weakness. That's flipped on its head in the last 20 minutes or so. We heard from the EU Commission President Ursula von der Leyen saying a full cut-off of Russian gas is the likely scenario. Essentially, Tom, Europe is preparing for a winter without Russian gas going into an ECB meeting tomorrow.
Certainly at the margin they are. You can go all doom and gloom in that, and the answer is we don't know if it's doom and gloom, but certainly at the margin, John. I would note, John, it's a very correlated move where equities were green. They're now red on the screen. The VIX actually goes a little bit gloomy, 24.67. So it's not just seen through euro as well.
I'm with you, Tom. Equities turned 2. Yields are a little bit lower by 5 basis points, 296.70. Tom, this is what you want politicians to be doing, preparing for the worst. You certainly don't want them to be surprised by a full cut-off of Russian gas later this winter. So we set the bar a whole lot lower, Tom, and we hope we don't have to deal with it, but it's becoming the most likely scenario for a lot more people.
And Ursula von der Leyen, of course, with her service to her Germany and the defense and the military side as well. Right now, and this is an immense joy with her Bank of England experience, Jennifer McEwen is with us out of UCL. She's with Capital Economics, a fabulous shop here that looks at global economics. I want to go local with you, Jennifer, on 9.4% inflation. Is the character of inflation in a given country, the United Kingdom, the same as double-digit inflation in Spain or 8-ish, 9-ish inflation in the United States? Is it all the same, or is each nation different?
I mean, I think there's clearly very similar forces that are driving inflation up and very similar implications in terms of the reduction in people's real spending power and the difficulties that households are having now. It's clearly weighing on spending both here in the UK and elsewhere. And I think what's worrying in these latest data is it seems that signs of domestic price pressures coming from the service sector, for example, are picking up.
Well, it's broadening out is what I'm seeing here now. Is Capital Economics looking at central banks always focused on some form of inflation-adjusted core measure, or are they looking at top-line inflation as they study this through the summer?
Yeah, well, it's a whole variety of indicators. What central banks are most worried about is core underlying inflation, given that that's the persistent part. But what they'll be looking for is signs that the rise in headline inflation, the rise in energy prices, food prices, is feeding through to that more underlying price pressure. And we are really seeing that now. There's been a pickup in wage growth across a range of economies, and also in services sector inflation and other measures of core inflation, which is really worrying for the likely persistence of price pressures going forwards.
Well, and that's clearly going to be worrying for Andrew Bailey and the Bank of England. How far can they take it, Jennifer, to get that inflation under control when you also have a deteriorating growth outlook coupled with it?
Yeah, well, it's a really difficult situation for the Bank of England and the ECB too, in terms of weighing the rise in price pressures, which is very clear in both economies, against the risk of recession. And in fact, in the UK's case, we think that the economy probably will fall into a technical recession. But at the same time, we think the Bank of England is going to be forced to go on raising interest rates, and we think it will reach a peak of 3% next year.
What about the ECB?
The ECB, we think the peak will be more like 2%. The neutral rate of interest in the Eurozone
They can get there,
is
Jennifer?
lower.
I'm sorry, but while we're talking about a recession in Europe and the potential cutoff entirely of Russian gas, do you think the ECB can not just exit negative rates, but get to 2%?
Yeah, I think so. It will take a lot longer than it will take for the Fed. And obviously, it's going to depend a lot on underlying conditions. What we're seeing at the moment in the Eurozone is a definite pickup in underlying price pressures. In Germany, in particular, recent wage negotiations suggest that wage growth is picking up. So this rise in inflation risks becoming sustained. And the ECB needs to be focused on it, on that. That's its target. Again, in the Eurozone's case, we think that it will dip into a mild recession, partly related to the limits on gas supply and uncertainty around that. But nonetheless, I think the ECB is going to have to press ahead.
And now, Jennifer, we pause for a moment of silence. We're calling this, Jennifer, Snooze Fest Wednesday, as we go into what is arguably the most important ECB meeting tomorrow. What will you listen for from Christine Lagarde and Philip Lane?
Well, obviously the first point is going to be whether it opts for 25 or 50. That will be a pretty clear signal of where it stands at the moment and what's likely to come going forwards. We think it's more likely to opt for 25, given that it's pretty clearly signalled in the past that that's where it would go. But then some indication of whether it's going to pick up the pace going forward, some confirmation of that. It's already suggested that it will pick up the pace. And we're penciling in a 25 this time, but then a couple of 50s. In the rest of the year.
Jennifer, a question off the mark. You were at UCL. Wendy Carlin is one of the giants of economics. Her mathematics, her algebra is just first rate. Does the algebra in Wendy Carlin's textbooks still work, or are we in such an unusual territory that the textbooks don't work anymore?
Yeah, do you mean with regards to the labour market?
The labour market, I'll let you take it where you want. I just don't, I really question whether the math works anymore.
Yeah, well, it's really, really difficult to model this situation. That so much has changed, and there are so many temporary factors at play. Not only concerns around gas supply, but also the pandemic, which we're still recovering from. It's very, very difficult to tell at the moment where kind of normal or neutral rates of growth are, what kind of rate of interest might be restrictive, what kind of rates are still very accommodative. So central banks are going to need to watch economies very, very closely, I think, to judge what effects their policy tightening is having on the economy and therefore respond to that. And that's why there's so much uncertainty really at the moment. If it's very clear that interest rate hikes are for example, hitting housing markets very hard, as they may do in some economies, then it may be that central banks can't go quite as far as we're all expecting them to now.
Jennifer McKeown there of Capital Economics. Jennifer, thank you. With a big call on the ECB, can they get to 2% given what's going on right now? I was just working my way through this statement that's just come out, this press release from the European Commission, Safe Gas for a Safe Winter. If you're just tuning in, here's the proposal. A new tool and a European gas demand reduction plan to reduce gas use in Europe by 15% until next spring. Of course, this is a proposal, but ultimately the conclusion for people in the Commission right now is the most likely scenario is a full cutoff of Russian gas. We'll see if that's the case. Nord Stream 1 is set to come back online tomorrow. When a lot of this information dropped, it confirmed what we'd reported yesterday afternoon, Tom, here at Bloomberg, but ultimately the market started to turn. Euro-dollar negative a third of 1%, 101.91.
Yeah, and again, all will wait for Mr. Putin because it's tied directly into sanction of parts.
Equities down 0.2% on the S&P 500. Netflix skipping a low bar. That stock is doing okay in early trading. From New York, this is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las mediciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings?
The most likely scenario remains that the economy is going to navigate through without going into recession.
We are going through the different cycles and parts of a bear market, but this is a process that still has further to play out.
We do not expect that the Fed is going to really dramatically reverse course and cut rates.
The ECB now has to do the best that it can, which means hike rates.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Farrow, together with Katie Lyons. Bramo out of the building. She'll be back on Monday. Futures, negative 0.1%. This market's turned around in the last 30 minutes or so. Tom, the headline, Europe preparing for a winter without Russian gas.
So those waking up in America, Ursula von der Leyen in Brussels, always important, but never more so now. And there's nuances here, John. Frankly, you know them better than me. What I know is I got a correlated move on the screen of a screen that changed about 40 minutes ago.
They're proposing something that we reported yesterday, a 15% cut in gas consumption on the supply concern, Tom, and it's quickly become the base case for the European Commission. Maybe this is the prudent response for policymakers to prepare for the worst. They're saying the full cut-off of Russian gas is the most likely scenario. And Tom, this goes into an ECB meeting tomorrow. We've said this repeatedly through this week so far over the last month. What a tough call they've got to make at that central bank.
Well, and it's not a call, it's calls plural. John, the interstate mumbo jumbo there, I don't really pay attention to, and I know 50 beeps is in play. Is it really in play, John?
They say it's in play, according to our reporting,
okay,
Tom.
So, we're going to have it come out tomorrow, but all I want to know is Germany and Spain on the same page? Is Germany in a fractured Italy? Our Francine Lacroix reporting from there this morning. Are they on the same page? I don't think they are, John.
That's the only good news out there this morning, Tom. The Italian 10-year debt is rallying.
Francine's getting a decent lunch and we're not?
Good for Francine, too. Yields are lower by 11 basis points on an Italian 10-year to 321. The spread between Italy and Germany right now in at around 200 basis points. Kaylee, Prime Minister Mario Draghi is holding on to that title. Prime Minister, just about.
Yeah, and what'd you say earlier? Maybe it's Draghi's job to monitor spreads.
Lorcan Roach Kelly said
Lagarde's.
It has been his job so far this week, that's for sure.
Well, and it's a job he is doing. The question is he going to continue the job of Prime Minister past today? Because he said he does think that the coalition can rebuild. The question is, will it rebuild? I believe there's a confidence vote at 1 p.m., so it'll be interesting to see how that develops. But whatever happens politically in Italy, the ECB has no control over, and yet that's something that they're going to have to consider when they're making these policy decisions.
You'd have to think this is a factor in earnings, wouldn't you? You and I have discussed it a few times right now. Weaker European economy, one. And then two, you've got this FX story. It's not going anywhere.
It's a double whammy for these multinational companies because on the one hand, you have slowing growth in Europe, which could hit demand, therefore revenue is lower. And then whatever the revenue figure is, you get hit with the FX headwinds coming down the other way, which is why we've seen warnings from the likes of IBM, which reported yesterday, guidance missing because of the dollar. Microsoft has warned about it. We'll look for clues next week, but I have a feeling that's going to be one of the most common themes as we get deeper into this earnings season.
Pushing ahead to big tech next week. Netflix this morning up by more than 6%. We were looking for a 2 million subscriber loss. We got a 1 million subscriber loss. That gives you an idea of how low the bar was, and that Netflix just about skipped over it. Futures right now down a little more than 0.1%. I'll whip through the price action for you. On the Nasdaq, we are dead flat now, unchanged almost at negative 0.04%. Yield still coming in, 5 basis points, 296.89 on a 10-year. There's your euro move. It's subtle, but it's there. We're down 1/3%. A weaker euro, 101.91. And Katie, just briefly, crude down a little more than 1% at 102.85.
Yep, still at triple digits, though. Obviously way lower than we've seen of the highs of the year, but still we're north of $100 a barrel on oil. Now, of course, that is one portion of cost going higher, but also the cost to buy a home is higher now that mortgage rates have risen with the Federal Reserve hiking those interest rates. So how much is that reflecting in existing home sales? We will get that data at 10 a.m. Eastern time following disappointments on both home builder sentiment and building permits yesterday, which fell about 2% month on month, really speaks to a cooling in the once really hot housing market as the Fed looks to tighten things in this economy. Then at 11 a.m. Eastern time over in the UK, we will get the final Tory ballot announced. Basically, who is going to be up against Rishi Sunak in the battle to be the next party leader and prime minister. Right now, it looks like Liz Truss actually is gaining momentum, may out overdue Penny Mordaunt, but of course there are implications to the UK economy considering Liz Truss would like to cut taxes. Then finally, after the bell, talking of a low bar going into earnings, Tesla will be reporting, and it's down 30% year to date. A lot of headwinds this company is facing on the supply side, specifically China, which has hampered production at its Shanghai factory. So what does the outlook look like in the second half, considering the COVID-0 policy in China, John, isn't necessarily going anywhere?
No, it's lockdown on, lockdown off, and then you've got this loan boycott as well that we need to stay on top of too in China. Katie, thank you. Joining us now is Jim Bianco, president of Bianco Research. Jim, you know the recent theme, don't even know if it's recent, it's been going on for months, fade the inflation story. Fade the inflation story. Jim, are you pushing back against that?
Yeah, I am. This year's people that are calling for inflation peaked are last year's people that called inflation transitory. And it goes to a broader theme in the market that there's a very difficult understanding of what inflation is. Look, the chairman was right. We understand now what little we understand about inflation, and the same thing applies to Wall Street. And the story continues that inflation is a problem, and it's going to stay a problem. And those that think it might have peaked at 9.1, I am kind of on the fence on that. But more to the point, it isn't going to come down fast anytime soon. And the Fed's going to have no choice but to stay aggressive. And the last thing is, I still think that all the talk about whether we're in a recession, and I happen to think we are, is of secondary importance. What's of primary importance is inflation. If it doesn't come down, the Fed's not going to stop. And in a recession, I don't think it's going to stop them.
Jim Bianco, your beloved Cubs are going back to the 1970s and their level of mediocrity through the baseball season. In the 70s, we were all nominal. You allude in your research note to the idea of nominal inflation analysis, nominal GDP analysis, the nominal analysis of corporate revenues in a new inflation world. Discuss that.
Yeah, so a lot of people talking about whether or not we're having a recession are asking the question, well, if we created 370,000 jobs, how can we have a recession? If we've got a bunch of positive economic reports, how can we have a recession? The answer is not whether or not it's positive or negative, is it faster than the inflation rate? And the answer for a lot of this is no, it's not. And that's why the first quarter GDP was negative. And that's why you're hearing more and more calls, including the Atlanta Fed GDP, for the second quarter GDP to be negative. Yes, on a nominal basis, it will have expanded. It just won't beat the inflation rate. And that gives you negative real growth. And that is the very definition of a recession.
Well, as we talk about, you think the U.S. economy already in a recession. You don't think it'll stop the Federal Reserve in its fight against inflation. Where is that going to put Fed funds when? Because you had Blackstone out overnight saying we're getting to 5% next year, potentially.
Yeah, that's not. Yes, that every Fed rate hike cycle has ended, every one of them back to 1950s, with positive real yields. In other words, interest rates above the inflation rate. Now, that doesn't mean we have to go to 9% on the funds rate. The inflation rate will come down, but we have to see the funds rate go above the inflation rate. Now, take Wall Street. Wall Street's most optimistic scenario is that the PCE rate, which is about 0.5% lower than CPI, will hit 4% by the end of next year. Well, that's going to put the funds rate over 4, maybe near 5. So I think people have to realize that rates have to go a lot higher. Now, the only thing that changes that is if we have a bad recession, and that kills demand and that brings down prices quite a bit. But then we have a bad recession at that point. So I don't see the idea of a September pause or the Fed is done after July as being in play right now unless something dramatically turns south in the economy.
Jim, I'll give you a final word. The ECB tomorrow. What are you looking for from President Lagarde?
President Lagarde, finally getting off the snide and hiking rates. I suspect that they're going to be like the ECB, and they're going to go 25, and they're going to be very considered and very slow moving. And all the talk about 50 is, while I think they should do it, they won't. They'll move very slow.
President Lagarde. Do you like that, Tom? That's a new one. President Lagarde. There we go. Jim Bianco of Bianco Research. Thank you, Jim. It's good to catch up.
Thank you.
President Lagarde, John, is just ex post.
Sure.
And maybe they're more ex posty than other central banks. Can you imagine the politics, John, over this fragmentation debate?
The problems are piling up. I think that alone, Tom, if that was the only thing they had to focus on tomorrow, that decision would be tough enough.
Fortunately, we don't have enough time here for me to get into trouble. But, John, economics is basically physics envy. And, there's like, Kaylee's been busting my chops about calculus. And there's a whole Newtonian calculus plug and chug. Jean-Claude Trichet is actually very wonderful at this. I look at the fragmentation debate almost as a thermodynamic experiment, and it doesn't work. It doesn't. You got to have a study of what will be the constraints if they succeed at fragmentation. And the only constraint I can come up with, John, is less growth, less, as Ned Phelps would say, dynamism. I don't understand how fragmentation is anything but almost a physics effort over to weaker European growth.
Tom, you've got to make a political call as well. You've got to work out the next move of the Russian president.
They do okay there?
And gas supply did great.
Yeah.
I think you lost many of us.
Yeah, we had a dog that died a couple years ago. We named him Entropy.
I've got no idea if that's true or not, based on the names of your current dogs.
Well,
I know. This from Neil Dutter over Renaissance Macro. Home purchase demand remains under pressure. For the weekend of July 15th, mortgage loan applications for purchase sank 7.3%, the third consecutive weekly decline and the lowest level since April 2020. Not good news for new home sales over the summer.
Yeah, John, it's real simple. I made a custom function yesterday of starts versus multifamily, home starts versus multifamily. It is a wow trend. This nation is moving to a renter nation.
You'll love this line, Tom. I've got to share this with you. It's from a Bloomberg subscriber. His mouth says physics. His suit says strawberry jam salesman.
Actually, Smucker's is a very good company.
That's kidding me. That is gold. Futures down 0.2%. Thank you for that.
Call it marmalade?
Keep sending them in.
In England, do you call it? You're the damn Marmite. Do you actually eat marmalade?
I don't eat Marmite. I'll eat marmalade though. I'll eat marmalade. We're done here.
Good morning in Ohio.
Good morning.
Smucker's the best.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Conservative MPs will decide today which two candidates will face off in the battle to replace Prime Minister Boris Johnson. On Monday, former Chancellor of the Exchequer Rishi Sunak topped the fourth ballot of Tory lawmakers. He was just 2 votes short of the threshold that would guarantee him a spot. Foreign Secretary Liz Truss is now the favourite to join Sunak. She's been closing the gap solely on Trade Minister Penny Mordaunt. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing some concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Vladimir Putin has signaled that Europe will start getting gas again through a key pipeline, but the Russian leader has some conditions. He says that unless a dispute over sanctioned parts is resolved, gas flows will be tightly curbed. Europe has been waiting to see whether gas resumes flowing on Thursday, when maintenance on the Nord Stream pipeline is set to end. And economists at Citigroup have labeled the global recession a clear and present danger. They say there is a 50% chance of a slump. In a report to clients, Citi economists said they now expect the world economy to grow 2.9% this year and 2.6% in 2023. That is slightly lower than previously. In a win for Twitter in the legal fight against Elon Musk, a judge in Delaware agreed to fast-track the company's suit to make Musk complete his $44 billion buyout. The trial is now set for October. Lawyers for Twitter say they'll need only 4 days to prove that Musk must honor his commitment. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stagflation risks are building in Europe.
It's sort of a perfect storm hitting the European economy at the moment.
How will the European Central Bank respond?
The central bank will have its work cut out for it.
Tune in Thursday to a special edition of Bloomberg Surveillance for the latest news from Frankfurt, including ECB President Christine Lagarde's following news conference in its entirety.
Counting down to a big central bank decision.
Coverage starts Thursday at 6 a.m. from New York. Bloomberg, your global business authority.
To make it through the winter, assuming there is a full disruption of Russian gas, we need to save gas to fill our gas storages faster. And to do so, we have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us.
Just moments ago, Ursula von der Leyen, the European Commission President, preparing Europe for a winter without Russian gas. From New York City this morning, good morning with Tom Keene and Katie Lyons. I'm Jonathan Ferro. Bramo back with us at some point next week. Futures negative 0.2% on the S&P, on the Nasdaq 100 down a little more than 0.1%. Bit defensive out there at the moment. Yields in 6 basis points lower to 296.33. That's the euro weakness. We were showing just a little bit of euro strength. Euro dollar down by 0.2%. Negative 0.2% there. Euro dollar Tom 102.08.
John, thanks so much. Futures at negative 9 right now. Lowell George and Linda Ronstadt may talk about Tehachapi and Tonopah, and they may be willing to look at global climate change as it is played in the southwest of the United States. The distance from Lake Powell to Lake Mead is nothing but grim, some 290 miles. They're living it in the southwest. They're talking about it in Washington. Anne-Marie Horton joins us now on our new climate change frenzy. Anne-Marie, it is so new in Washington. It is so today. It is so this morning. I guess the president's going to say something about it. People out in the Southwest are going, are you kidding? Tell us the character and quality of the jawboning today on climate change.
Yeah, he's going to be talking about it in the Northeast, actually, Tom, in Somerset, Massachusetts, at an old coal-fired power plant. Used to be one of the biggest in the Northeast, and it's now a hub for some of these cables that are going to be needed for more than dozens of wind farms in the Northeast. And the president is going to say climate change is an existential threat. He's going to talk about some executive action, directing some funds to some of these communities that are hard hit by climate change, but he's going to stop at an emergency decree. And this is right now what the White House is weighing, whether or not they should go as far as an emergency decree. But if you look at the New York Times today, one of their main stories is a heat index. 80 million Americans, about 28% in contiguous United States, is living in heat levels that are not normal. This is a moment he can speak to, whether or not it's the United States, whether it's southern France, what's happening in Athens. There is obviously a moment he could speak to that may resonate with the electorate.
Anne-Marie, you look cool, calm, and collected after Jeddah. I mean, everything is relative. What I would suggest, Anne-Marie, is everybody's going to trot out the same old on climate change. And what it comes down to for conservatives is the arch fear that climate change will diminish growth. What's the pushback from the White House?
Well, the president will talk about the fact that climate change does the opposite in his sense, or fighting climate change, I should say, because it is an avenue for new jobs. And for the most part, a lot of renewable jobs are very much so higher paid jobs. So the president will use that as a way that this is not going to be hindering in growth. But when you look back or you think about them potentially weighing this emergency decree, they are really going to be walking a tightrope. The president is coming out and talking about this because of what happened last week, which is Senator Manchin saying that the climate provisions and the tax hikes are dead on arrival, but they still need his support in a 50-50 Senate when they're discussing other legislation like health care. So potentially, if they were to go to a decree, an emergency decree, which would really give the president really broad powers. We're talking about when there's a hurricane, a terrorist attack, things that we do not experience every day or in decades sometimes. Those kind of powers we're talking about, they may ostracize Senator Manchin. So it's a difficult line for them, but today he's going to try to make sure that his party knows something that he voted on, he ran on during the campaign, that he's still committed to.
Well, let's talk about the issue's importance for voters then. I just pulled up some Pew Research survey of the American people on what the biggest problem facing the country is. Climate change comes in at number 6. Then you have the deficit, gun violence, violent crime, the affordability of health care, which you were just speaking to. Inflation, far and away the number one. 70% of people responded with that answer. So, Anne Marie, does really any action the Biden administration needs to take between now and November have to address inflation in some shape or form?
Well, I'm sure they will spin today's climate change action as bringing down the cost of energy in the future and also not having to rely on a global marketplace if they have renewables at home via solar or wind, that what we're seeing, say, in the oil or natural gas market. The other thing with Kayleigh, as you're saying, bringing down inflation and wanting to bring down the price of gasoline, although right now it is a national average below $4.50. If they were to go ahead with this emergency decree, what kind of message would that send to the same producers in Texas that they are at the moment are trying to beg to produce more once that SPR runs out?
Anne-Marie, what do you make of that? What will they say?
Today, they're going to talk about the executive actions they could take. I think this is why they are still weighing this emergency decree and they don't want to touch it just yet, because they need the help of every oil and gas producer in the United States, especially going into the winter. We already see what's happening in Europe this morning, telling consumers and industry to cut by 15% their natural gas consumption. They are trying to make sure they have enough oil and natural gas, and we do in the United States, but they want to make sure they can bring those prices down. If inflation and gasoline is your number one concern, you cannot ostracize the industry.
AMH, got to catch up outside the White House. Tom, build a refinery at the same time. We don't want to see that refinery in a few years' time. Are you there?
I'm there, John. It's the same argument. CNN has a great chart, John, in the last couple of days showing the water level of Lake Mead. And you don't need a rocket science degree to know it is absolutely grim what's going on. And, you know, there's some optimism, I guess, on some of the conservation efforts that are being made. But between the Colorado River and up to Utah and up to Wyoming, I mean, this is absolutely critical. I mean, there's no other way to put it. We're at a new place, is how I'd put it.
This administration in a new place as well, Tom. Gas prices have been coming in every single day since the middle of June, going by the average daily gas price. That was what AMH was talking about. Sub 450, Tom, on gasoline.
Yeah, Greg Valliere writes this morning. He's going to join us here, and you know they need to get back to $3 for the Democrats to take a victory lap. Yeah, I get that that's the item of the moment. And of course, in the heat of summer, it is important. There's a lot of suffering going on. You don't need to know that, John, over what you see in the United Kingdom. But I would suggest that the climate change debate has shifted, and for conservatives, it's about conservative Arizona, conservative New Mexico, conservative Southwest, all the way over to San Diego. They're running out of water.
Well, Tom, I'll tell you what, in Europe, we're reconsidering what's green and wondering whether nuclear is going to be a bigger part of that picture, given what's happening with Russia.
Yeah, well, again, that's green, and look at the coal chart. I would just look at the price of coal, talk about a reversal.
Big reversal. Futures, negative 1/10% on the S&P. On the Nasdaq 100, we are unchanged. Your euro slightly negative, negative 0.25%. Euro dollar 102.03. A big 24 hours for Europe. Coming right up.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Biggest day of gains on the S&P 500 behind us since June 24th, coming into this morning, and good morning to you. We're negative about 0.1% on the S&P. On the Nasdaq 100, unchanged on the Nasdaq 100. Bit of a turnaround in the last hour or so. Bit more defensive. You see that in the bond market. Let's take a picture, a snapshot of that for you. 2s, 10s and 30s. Your 10-year comes back in 6 basis points, 296.52. On a 2-year, we trim some of that move higher. We're lower by 6 basis points or so to about 317. We've basically been hanging out at these levels all week. The Fed quiet period may be helping things out just a little bit. None of that volatility from speech to speech going into the Fed meeting next week. Tons of volatility in Europe we can talk about. So let's take a picture of things right now. Euro dollar, and then we can compare a German 10-year to an Italian 10-year. And there are 3 things to look at. Point 1, Italian politics. It looks like Prime Minister Mario Draghi may hold on. He signalled he's willing to. There's a lot of work still to be done. That compresses spreads just a little bit. You see that with the Italian 10-year down 10 or 11 basis points. The spread between a German 10-year and Italian 10-year just about inside 200 basis points earlier on today, in and around 200 basis points or so right now. That's Italian politics. Then we need to talk about the ECB, the prospect of a 50 basis point hike, and of course that new bond buying tool. What does that look like? Well, we actually see the details of that tomorrow. That's point 2. Here's point 3. Tom, Russian gas. Europe is preparing for a winter without any. Point 1. Point 2 on this story over Russian energy is Vladimir Putin has signalled that Nord Stream 1 could come back online, though as TK you know, this comes with conditions. Will we settle that spat over sanctioned parts and how much gas can actually run through that pipeline?
Yeah, what I do is I go to the Bloomberg and I look at Rotterdam coal, which has pulled back over the last 5-6 days, with 3 days here, John, of a little bit of a leg up, not near February 24th and that explosion, but buttressed right up against a winter of agony.
So if you're trading the euro side of things, Tom, you're trading those 3 things right now: Italian politics, the ECB, and Vladimir Putin's next big call. And that's before you even factor in the dollar story.
What if she comes out tomorrow? I mean, today's a snooze fest. At 8:45 tomorrow, she comes out and says, we don't have a fragmentation plan.
Then I think we've got a problem.
Yeah.
I would suggest we would have a problem if they don't have a plan. Is their willingness to come up with a plan enough to cap things? Perhaps for now, that seems to be the story. But at some point, the market starts to call your bluff, Tom. Euro dollar just sub 102 at 101.99. We're negative about 1/3%. That's the cross-asset price action. We can get you some single names and say good morning to Kelly Lyons. Hey, Kelly.
Hey, John. Well, Netflix is one of the big stories of the morning. We were expecting they could lose 2 million subscribers in the second quarter. The good news is they only lost a little less than 1 million. So, yes, still a loss, but it wasn't as bad as was expected. And when the stock was down near 70% year to date before the print, you are seeing some relief coming into the shares this morning, up about 6 6% before the bell. You had other earnings movers as well this morning. Biogen lifting its full-year earnings outlook earlier. However, there was a bit of a disappointment in the pipeline, which may be why the stock is down 2.4%. You also have Baker Hughes lower. It missed expectations, a large part of that due to the suspension of business in Russia. It also said that the oil demand outlook for the next 12 to 18 months is deteriorating, which I think is really interesting. That stock down about 4%. Of course, we're awaiting more earnings today. After the bell, Tesla will be reporting. This is a stock down 30% year to date, facing a lot of headwinds from China in particular. So we'll look for clarity on that. The share's up about 1% ahead of those results. But speaking of China and specifically the COVID-0 policy, due to an outbreak in Macau, casinos have been shut. They look like they're going to reopen on Saturday, July 23rd. So that's giving a lift to some of those casino operators with big business in Macau. Wynn Resorts, Las Vegas Sands, each up in the ballpark of 1.5% to 2%. Tom?
Katie, thanks so much. Okay, what we're going to do here, folks, is we're going to get away from the vanilla, stocks up, stocks down, price, yield, you know, the usual surveillance chit-chat, and actually go inside baseball on what pros are talking about in the debt market between a yield that's a yield and a yield that floats. It's called the floating rate market, where the piece of paper adjusts in yield over time. Expert on this is Deborah Cunningham, Global Liquidity Markets, CIO at Federated. When she goes swimming, she doesn't use floaties, but she studies the floaties as well. Deborah, I see an immense focus now on floating rate paper. How big could the losses be? Floating rate floats up, price down.
You know, with floating rate securities, it's the beauty of the instrument in a rising rate environment is that it protects pricing as well. So as interest rates go up, generally with a fixed rate security, your price goes down because it's not worth as much. It's not earning as much. With a floating rate security, however, that interest rate adjustment assists in maintaining the pricing value of the bond. So it's likely to be something that works well in a rising rate environment.
But then, like convertible bonds, when it gets into an optimal scenario, as perhaps we're in right now, do they get priced up where they're not attractive just because of demand?
They absolutely do. And I can tell you, my team every single day tries, wrestles with the question, when to extend and when to switch from fixed to floating. It's a timing situation in the marketplace. We don't think we're quite at that time frame yet. However, we've done little chunks of that conversion, as short-term interest rates have continued to go up over the course of the last month. Not putting big bets on anything, but making some small reversals that we think would help and extend, the higher interest rates for a longer period of time with the fixed rate securities that we've kind of layered in on top of what's still predominantly floating rate securities in what we think will continue to be, at least for the next 9 months or so, an interest rate increasing environment.
Deborah, we saw a ton of that at the turn of the year. People just flying in, powering into leveraged loans. Seemingly the worry was higher rates and not credit quality. Deborah, has that changed in the last few months?
It hasn't changed a whole lot. In fact, this earnings season, I think, convinces people even more that credit is not challenging right now. Certainly the largest component of credit within the market, generally the financial sector, is, at a peak from a credit metric standpoint. Capital's high, reserves are high, losses are low, non-performers are low. Now that will change. We'll get to a point where, there's a peak and we start to go down the other side of the credit curve. But for the most part, we haven't reached there yet. Even manufacturing firms, autos, various types of building supplies, different types of energy companies, they continue to be very high from a credit metric scoring standpoint.
Yeah, I hear from so many people that things aren't going to get messy enough in credit that it causes the Fed to blink in any way. And while we're talking about the Fed, Deborah, we focus so much on rate hikes, how large they will be, how long they will be large, all of that. We don't talk as much about the fact that quantitative tightening is now underway. You say the impact of that so far has been negligible. Is it about to become less negligible?
It may be. I think it will be welcome in the context of increased Treasury securities coming back online, if you will. We have had a supply-demand imbalance in the Treasury marketplace with, those wanting less risk seeking, higher proportions of Treasury securities. At the same time, supply has not been increasing. When we see Treasury securities from a QT perspective start to make an impact and build up that supply again, I think that will be healthy. On the MBS side, it may not be too bad of a problem there either as MBS securities come back online, just simply because they can be used as collateral within repo transactions. And right now, when you look at the Fed's reverse repo facility, it's at an all-time high, continuing to be, making records on a monthly basis. And as such, if there is additional mortgage-backed supply in the general markets, maybe the banks and broker-dealers as traditional counterparts come back online with that. So I don't think it's a huge issue, even as the Fed ramps up that QT problem.
And just one final question on Fed guidance, Deborah. Can we still trust it?
Well, we were a little bit surprised last month during a blackout time period when, all of a sudden we went from 50 to 75 basis points because of a mysterious media leak, through the Wall Street Journal. I think just this past Monday, 2 days ago, there was considered to be maybe another mysterious leak. And I think that's people just now having their antennas up because of this, one-time event that occurred.
Deborah, John Farrow aged over those mysterious leaks. I think we saw the first gray hairs. I think.
I think there are lots in the industry that did as well. It was a surprise. And I think if the Fed wants to regain confidence, they either need to, use that as a tool more often and make it legitimate in the minds of those that are, traditional Fed speak watchers, or back away from it and maintain that, that correct blackout time period.
Deborah Cunningham, thank you. Federated Hermes. Deborah, thank you so much. Tom, it's now the ECB doing it, apparently, as well. Look, the guidance doesn't work if this is what you want to do. Let's put it that way, to Kaylee's point. Just quit doing the guidance. Quit doing the forward guidance. What's the point in it?
John,
if you're just going to make the call 2 days out in a newspaper article.
You look over the span of a Bloomberg career and you look at important dinners. And I had a forgettable dinner. The food was terrible. With Richard Berner, the giant of Morgan Stanley and all his good work as public service to the nation. And Berner was absolutely scathing on the over-communication and how it harms the anchoring of central bank confidence.
Tom, this is the post-financial crisis communication framework. We talked about it earlier this week. It's broken down.
Should we go back to Greenspan?
It had a purpose, Tom, in the low inflation era. It was about convincing people rates are going to stay low for a long, long time. This time around, I would argue, and I think most people would too, it slowed them down. It slowed them down, Tom, in a massive way as they look to respond to something moving a whole lot quicker.
Yeah, I just think it's over-communication. I mean, you know where I am on the dots.
We're on the same page. The regional Fed
just trying
presidents.
to talk myself out of the Fed special, July 27th.
Should we have a limit on Fed president speeches, Tom?
I don't know. Should we do an ECB special tomorrow? John, you and me in Frankfurt, we can leave. Kaylee can do the 9.
You want to leave this
simulcast. You and I, we don't need to pack our bags and ready to go because we'll lose the luggage anyways. Just go.
You ping a message to Al from New Jersey.
No, I just think Kaylee can do the 9 simulcast. Do it with Paul Sweeney. We'll get dashed to the airport.
The 9 tomorrow's a 15-minute show because of the news conference.
We can buy a toothbrush in Frankfurt. I think it makes sense.
You're selling it, Tom. We're down 0.2% of 1% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The House has passed a bill that would recognize same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. President Biden will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. Former Secretary of State Henry Kissinger is warning President Biden against endless confrontation with China. The man who helped re-establish U.S. ties with the nation in the 70s spoke in an interview with Bloomberg News' editor-in-chief John Micklethwaite. Kissinger said that geopolitics today requires, quote, Nixonian flexibility to help diffuse conflicts between the U.S. and China. Tesla reports earnings after the closing bell today, and the electric car maker's run of rising sales and profit is under pressure. During the second quarter, Tesla faced challenges including supply chain difficulties and lockdowns in China that hurt its ability to make cars. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market defined by underinvestment. We just haven't been investing enough. Right now, even above $100, there isn't really an incentive to increase investment. And I think that's why we remain structurally bullish this space.
And Rita Sen there, the chief oil analyst at Energy Aspects on the crude market right now. Crude right now, just a little softer, 102.48 on WTI. From New York City this morning, good morning. Futures negative 0.2% on the S&P. On the Nasdaq 100, we're down about 0.1%. Euro weaker, decidedly weaker in the last couple of hours. We're negative 0.4% there. Euro dollar 101.90. The European Commission preparing for life without Russian gas this winter. The Russian president, Tom, signaled that they could get some gas through Nord Stream 1 when it comes back online, but there are some big conditions attached to that.
Big conditions and also real ignorance about engineering. We're going to solve that right now. Will Kennedy joins us, Senior Executive Editor for Energy and Commodities at Bloomberg. And when Will Kennedy and Stuart Wallace built our industry of hydrocarbons at Bloomberg, which I won't mince words, is world best, world class, he said, we've also got to understand how this stuff actually works. Will Kennedy, I think the vast majority of people looking at gas flows, Nord Stream, and tossing around all these phrases, their knowledge base starts with the thing they hold in their hand at the gas station when they put gas in the car. Let's talk about what actually these parts are. The gas flows at an unthinkable high speed, and that has to be forced by what? Ginormous turbines? I mean, it's almost science fiction, isn't it?
That's exactly right. You've got these pipelines that stretch all the way from Siberia, Tom, through Russia. Nord Stream 1, which is the one we discussed, line goes under the Baltic Sea, into northern Germany, and into the European gas pipeline network. Now, when you pump natural gas, you have to pump it, and what you get are these big turbine stations where it compresses the gas and forces it through the pipeline. Those turbines would look very much like enormous jet engines, similar to what you see on a Boeing or an Airbus, but a much greater scale, and they're very complicated, very highly engineered pieces of kit. And what we're talking about now, the games are being played about repairing, maintaining these turbines, and they've gone to Canada and gone back, and that's what Putin's been discussing this morning.
I mean, Will, we're making jokes about WD-40. You don't even know what WD-40 is. It's an American spray silicone thing that helps you get the, you know, the swing. Oh, you have that. It gets a swing set going on the backyard. You can use it to lighten up the Marmite in the morning. And Will, I look at the engineering involved here, and the answer is it's about sanctions of highly sophisticated stuff. Who makes a decision that whether it's GE or Siemens or whoever, that we unload those turbines over to Mr. Putin?
I mean, it's being made at a government level. I mean, these turbines, and I think the one that we've been discussed was made by Siemens, you know, they went to Canada, and then Canada said, well, we can't send it back because it's sanctioned, and then the EU had to intervene to say, no, it's okay, we'll make an exception. So these parts, these enormous turbines are becoming instruments of international diplomacy and sanctions and, you know, economic warfare. It's fascinating.
So, Will, help me understand what I actually need to look for tomorrow. With the ECB, we all get it. I know when the decision comes out, I know when the news conference is, I know precisely what to look for. Will, with Nord Stream 1 coming back online, I have no idea. All I know is that it's meant to happen at some point tomorrow. Will, can you walk me through step by step what you as a team will be looking for through tomorrow?
So the first stage is that traders expect it to come back from its annual maintenance. This afternoon they will make nominations, which is industry jargon for trying to book pipeline capacity for gas to flow through. They'll say how much gas they want to take out of the pipeline, and they'll make those orders, and there will be a response. Tomorrow morning, we will look for how much gas actually comes, and it's expected tomorrow morning, judging by Putin's comment, it will probably come at some point tomorrow morning. The key thing is just the volume of gas. Before the thing went down for maintenance, because of the lack of the compressor that went to Canada, that was Russia's story anyway, flows were only at 40% of normal. Traders will be looking to see if it comes back at that level, higher, or a little bit below. Not entirely clear from Putin's statement where that will be. I think what's clear here is Putin and Gazprom and the Russian government want it to come back at a reduced level, and it gives them huge leverage to sort of just very crudely turn the dial up and down as we get towards winter. And, you know, sometimes we might get more gas, sometimes we might get a little less gas. But we'll know more by the time you're presenting tomorrow, Tom, we should see how much is coming through the pipeline.
Well, Will, while we're talking about volume, you had Ursula von der Leyen earlier saying that the EU is aiming to cut consumption by 45 BCM. Then you had Commissioner Simpson, the energy commissioner, saying that the gas cutoff may cause 30 BCM of a supply gap this winter. Can you just run us through where those numbers need to be to match?
Yeah, I mean, it's going to depend on how much gas comes from elsewhere as well, how much LNG they're able to get into the system, and how they're managing to battle those bottlenecks in terms of, you know, they don't have LNG terminals in the right places, they're going to put temporary ones in. And also it depends on the weather, how much they manage to get into storage over the next few months. But the bottom line, I think, is the number that von der Leyen put today when they released their strategy, cutting gas consumption this winter by 15%. That's a very big number and will require a lot of behavioral changes, both from households and businesses within the European Union.
Hey, Will, thank you. Really important stuff. Will Kennedy there of Bloomberg over in the City of London. Katie, so by the time we come on air tomorrow, we'll have a decent idea of what's happening with the pipeline, apparently, and then it's on to the ECB.
Yeah, but does that change Christine Lagarde's decision, John, when there is still a question of for how long that gas will flow, in what amount that gas will flow, how that economically will play out across Europe?
This is difficult stuff, isn't it? It's 25 or 50 tomorrow, and I think that's kind of irrelevant for the bigger picture. Tom, we've asked the question how big that window, how small that window is for this ECB to hike in. We had a guest in the last hour. He was talking up 2%. On ECB rates, 2%. First thing Katie did was shrug her shoulders to say, really? 2%? That's going to be a big ask, Tom.
It's a huge ask. And John, I'm going to go back to run rate nominal GDP. You know, we talk about terminal values. What's a terminal value of United States nominal GDP? I mean, I think optimists would say 4%, maybe even 5%. Can you say that of Europe? I don't think so.
I know you prefer British politics, Tom. The Prime Minister, Boris Johnson, just signed off from PMQs. His
like
final
forever?
PMQs as Prime Minister. And I understand his parting words were, hasta la vista, baby. And then he dropped the mic. I think that's how it went, Tom. Just saw that headline cross. The other thing he said is that his successor should stay close to the Americans. Stay close to the Americans. Some parting words from the Prime Minister, Boris Johnson, Tom.
But I'm confused in that it's July, and he's not out. He's in office till September, right, John?
No more PMQs, though.
What,
Boris
they take
Johnson.
the summer off?
So the caretaker doesn't answer questions? Is that
I've got no idea how this works, guys. You're looking at the wrong guy. Just because I've got the right accent doesn't mean I've got the knowledge to talk about
John,
this
we
stuff.
looked at the person in the room that eats Marmite. You came up,
I
so
don't
we're
eat.
asking
I
you.
don't eat Marmite. Tom, you eat Marmite.
Were you
Tom's trying
forced
to
to eat
convince
Marmite?
everybody else to eat Marmite.
Would you eat Marmite,
God,
Tom,
no, I tried
for
it
breakfast?
once. It was appalling.
I've got no interest in this stuff.
It's like the piece of sausage in a full English. I'm like, really?
Oh, right. Yes, the black pudding.
The black pudding, yes.
Yeah,
Why do they
like
call
the
it
pig
pudding?
with the pig's blood in
It's
and stuff
just-
like that.
Gross.
You've eaten it. I've seen you eat it.
Good. Can you give me some new tang? Thank you.
Futures down 0.2% on the S&P from New York. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're still in an environment where you have the same headwinds we've had for most of the year.
The key to continued growth is the American consumer.
The big issue is that while inflation risk, in my mind, is on the way down, recession risk is on the way up.
We're looking for some pretty aggressive near-term hikes. And then I think that the Fed is going to relax a little bit.
My concern is that the ECB has been very, very late in actually going into a hiking cycle.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene at 8 a.m. on a Wednesday morning. It's a snooze fest Wednesday, maybe. Tomorrow, an ECB meeting of immense importance worldwide. Kaylee Lyons in for Lisa Abramowitz this morning. Lisa's on the edge of Everest, I guess. John, we've really got a frame here right now. We haven't really done this yet today. Lagarde's going to come out with statements at 7 o'clock, whatever, tomorrow, and then what happens?
Then what happens is we need to find out a few things. One, what they do with interest rates. The first interest rate hike in more than a decade. That's expected. 25 or 50, maybe a slight lean towards 50 over the last couple of days.
Really, you think so?
Reporting.
Okay.
Not for me personally, but Philip Lane is set to offer that proposal to the Governing Council. We'll see what they decide. I think most people, the consensus view, still 25. That's rates down with. Then we need to work out what happens with the bond buying program. The new bond buying tool that's set to prevent fragmentation. I know that really gets you going. That's point two. The other issue, Italian politics, that's another one, Tom. And then I'll throw you in a second one as well. On top of that, on the ECB, you need to work out what happens with Russian gas as Nord Stream 1 comes back online. Tom, that's four things, two for the ECB and another two external to the ECB that you need to watch tomorrow.
And we've seen that through the morning here, Ursula von der Leyen in Brussels. For Americans, it's all a jumble, all confusing. John, we go back to observing the markets, and part of the markets is very good equity pricing the last 10, 15 days.
Really nice day of gains in yesterday's session on the S&P, Tom. Every single industry group positive. The earnings from Netflix, I'm not going to say they were good. They just weren't as bad as they guided us towards. If you're looking for 2 million subscriber losses and you end up with 1, I think we're skipping a very, very low bar. That stock up this morning by 6%. The big test for tech is next week, TK.
Yeah, Kaylee from Virginia. Thanks for watching, Kaylee. She emails in and says, hey, stupid, it's not 7 o'clock anymore. Look for the ECB in the 8 o'clock hour tomorrow. Kaylee, that was good to get that message in, Kaylee. Thanks you so much for keeping me on the straight or narrow. Kaylee, I look at where we are in the heat wave. We talked to Anne-Marie Horton about it. I'm sorry, the silliness in Washington over climate, at the end of the day, it's not funny.
It's not, and this is a campaign issue for President Biden. This was something he campaigned on, wanting to be a climate president, and instead what he has gotten is a pivot toward fossil fuels, asking oil producers to pump more because we're dealing with rampant inflation and high prices at the pump. On the climate issue, the messaging is very difficult for that reason, and of course he would like to have gotten something done legislatively. Joe Manchin said, yeah, no thank you, so he's going to announce, we think, some executive orders potentially today, but stop short of declaring an emergency.
John, I was frozen yesterday by the Sky video of a village in what they called Greater London, I don't know what that means, actually burning to the ground. Were you surprised by that?
Yeah, Tom, I was surprised about how hot it got very, very quickly, but it's faded. I'll say this, I'm unsurprised by the consequences, Tom, because ultimately we don't have the infrastructure to deal with any of it, do we?
No.
In the UK. It's unexpected. The question you've got to ask is whether you should expect more of it in the next few decades, Tom, and we're guided by the scientists to believe that's going to be the case.
I would urge you to become familiar, folks, with Bloomberg Green. We're trying to make a real responsible effort there to bring the science and mix it in with the emotion of climate change, whatever your thoughts are right now. John, I've got to look at the emotion of the market, and, well, you know, it's up 3-4 days. To me, the number one statistic, John, is a VIX 32 to a very good 24.43.
Futures come in a little bit. We're down 0.2% on the S&P. On the Nasdaq 100, we're down 0.1%. Yields in 5 basis points on a 10-year, 297. In the FX market, the euro just slightly weaker. We're down 1/3%, 101.96 going into Europe's big day, Tom, tomorrow.
Across economics in the market, Scott Clemens has noted at Brown Brothers Harriman for trenchant notes. We're in the middle of it. There's a single phrase, a single moment where he just stops and cuts to the chase. Scott, there it was with all your experience. Markets, when they turn quickly, don't they?
They turn quickly and they turn unpredictably. One of my favorite subscriptions is newspapers.com. I am not a paid promoter of them, but it's interesting to go back and look at what headlines we confronted on the days that market bottoms, like in March of 2020 or even in March of 2009. Markets are forward-looking mechanisms. They always bottom months, quarters, sometimes even a year before the news flow, the economic news flow begins to turn better.
Are we there right now?
I'm skeptical, Tom, and I think that predicting a market bottom is more a job for financial market historians than investors in the moment. If you pressed me on the issue, I would say it doesn't quite feel like it yet. We haven't seen the big outflows from equity mutual funds, and we don't seem to have had any of those capitulation sell-offs that typically mark the bottom of a market. We're about to head into the flow of second quarter earnings reports. I think companies may make the opportunity to kind of kitchen sink some of the numbers. That may be the next spate of bad news that sends the market lower.
Scott, can you imagine a bottom without a Fed pivot? That's what I'm trying to work out here, Scott. Can you really get that inflection point in the equity market without a Fed pivot? Because every single bottom of the last 5 years or so has coincided with the Fed making a change.
Yeah, you know, Jonathan, what may play out this time around is, of course, the Fed meets in a couple of weeks' time. I think they're likely to raise interest rates by 75 basis points. That's kind of a consensus expectation. But then there's a long stretch before the next Fed meeting in September. We get 2 additional inflation data reports, 2 additional labor market reports, and, of course, Jackson Hole is in between that. So there's a real breathing space there for the Fed to ascertain what has monetary policy done so far. Is inflation genuinely coming down? Is most of our work done? And if the market concludes and the Fed concludes that most of their work is done, yeah, I think you could see a pivot in the market without any kind of real Fed pivot, just a change in market expectations.
Okay, well, obviously the Fed has to consider what is happening in the broader economy, not just on the inflation front, but on the growth side, on the employment side. You have a line in the notes you sent over that it's hard to call this a recession if the economy is adding hundreds of thousands of jobs per month, wages are rising, corporate profits are rising. We were just talking to Jim Bianco earlier, who said you can have job prints like this and still be in a recession. He thinks we're there. Why do you disagree?
Well, I think, Kaylee, like so many other parts of this economy, we're still living in the ripple effect coming out of the pandemic-driven economy. So we could very easily get another negative GDP print for the second quarter of this year. And of course, it was slightly negative in the first, and that's 2 consecutive quarters, and there's your recession. However, given the importance of the consumer in the economy, almost 70% of GDP, we've added 2.7 million jobs in the first half of this year, and I know a lot of that's recovery. It's not really job additions. Wages are growing. Retail sales are growing. Yeah, could you get enough of a slowdown to technically qualify as a recession? Yeah, but honestly, I think that becomes more of a semantic argument than it becomes an economic argument.
Great to catch up, Scott. As always, Scott Clemens there, Brown Brothers Harriman, on the latest in this equity market. Tom had a lot of back and forth yesterday about those inflection points in equity markets coinciding with the Fed going max dovish. Hard to believe they go max dovish anytime soon. Whether it's sufficient enough, though, just to take a pause later this year, does that get it done? Do you remember the September pause of a month or so ago? Do you remember when that started to gain some traction quickly and then that quickly faded?
My best thing about market bottoms is the way you learn you can't find them is to enjoy losing money, which I have enjoyed losing money trying to game a bottom.
What did Jim Bianco of Bianco Research say this morning, Tom? He said inflation is peaked as the new inflation is transitory. Some pushback from him this morning.
Yeah, well, the inflation question is very good. And, 9.4% in the United Kingdom is a wow statistic. And the other thing, John, and I think UK is leading on this, is a difference in wage gains among private employees versus public employees. That's a tinderbox ready to explode in America.
I know, Tom, in a big way. And what we're going to see, strikes potentially. We're seeing more of that across Europe, TK, much, much more of that. It's hard to imagine things get easier in Europe, particularly anytime soon. That we haven't seen the worst of it seems to be the take at the moment.
And John, I have trouble with the people who say the striking this time around is different than the 70s. If we get an inflation that persists like the 70s, I think all bets are off on that idea.
You would know, given the history of the labour market, though, given the fact that the union membership is so much lower now versus then, Tom, the pass-through from headline inflation into wages has been tempered somewhat. I don't think that gets talked about enough, TK, that if we had union membership as high as it was back then, can you imagine the pass-through to wage growth, headline inflation, and how that can spiral really quickly?
There's a lot of work on that, and I think Germany, sort of the guild structure of Germany goes to that as being maybe the last vestige of it. There's certainly some of it within the public offices within the United States as well. John, what I would look at again is the economic growth that we're going to learn about in the guidance of earnings. It really starts with Tesla today and then into the tech companies next week. And frankly, the non-tech, the ones we don't talk about this time around, John, are very visible, very important.
Much more about next week, Tom. I'm totally with you. Microsoft, Alphabet, Tuesday, Facebook next Wednesday, Amazon, Apple on Thursday. Got a Fed decision sandwiched in there as well, TK.
I did this yesterday, John. This is important. Last night the Red Sox weren't losing, so I had to do something.
Well, they weren't playing, were they?
Yeah, but they weren't losing. So, I looked at a famous toothpaste company, and I really read their first quarter report. And it was all about how do we recover from a 200 basis point margin decline. Price increase, innovation, and resizing, about putting 4 tomatoes, in the box that used to have 5 tomatoes.
Instead of 5 or 6. Who's this guy, Giancarlo Stanton, Tom? Doug Cass keeps talking about
That's good. Nice of you to bring that up.
Yeah.
It's a conspiracy.
Is he good?
Conspiracy. Okay.
I've watched him play.
You're a Yankees fan?
I've watched him play.
One of my interns is a Yankees fan. How the hell did that happen,
I always say I'm
John?
so impressed by Aaron Judge. Aaron Judge is massive, Tom.
He's massive.
That guy's a giant.
Yeah, he's a giant.
He's a real deal. You go and watch the Yankees, and seeing that guy in real life.
I guess he's done with the Yankees. I don't know. He'd look good in a Red Sox uniform.
I'm sure you'd love that, wouldn't you?
Yeah.
Futures unchanged on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Rishi Sunak may end up on top today when Conservative members of Parliament vote to decide which two candidates will battle to replace Prime Minister Boris Johnson. Sunak finished first in Tuesday's fourth ballot. It's the battle for second that's heating up. Foreign Secretary Liz Truss is now the favourite to join Sunak in the final ballot. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Economists at Citigroup have labelled a global recession a clear and present danger. They say there is a 50% chance of a slump in a report to clients. Citi economists said they now expect the world economy to grow 2.9% this year and 2.6% in 2023. That's slightly lower than previously. Apple shipments probably surged last month in China after lockdowns were lifted. According to data from Beijing, China's mobile phone shipments jumped 9.2% in June. Overseas companies such as Apple and Samsung led the way, whilst the market share of domestic phone makers fell. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Stagflation risks are building in Europe.
It's sort of a perfect storm hitting the European economy at the moment.
How will the European Central Bank respond?
The central bank will have its work cut out for it.
Tune in Thursday to a special edition of Bloomberg Surveillance for the latest news from Frankfurt, including ECB President Christine Lagarde's following news conference in its entirety.
Counting down to a big central bank decision.
Coverage starts Thursday at 6 a.m. from New York. Bloomberg, your global business authority.
We think the dollar can still rise further. We think the DXY will move up to around 112 by the third quarter. That's on the back of the fact that we think the Fed is much more likely to meet or beat implied rate expectations than the ECB.
Andrew Sheets there, the chief cross-asset strategist at Morgan Stanley. 112 on the dollar index. Right now we're just short of 107. That gives you an idea of how much upside they think still exists on that particular index. That currency could get a whole lot stronger. Where does that leave the euro? The euro right now looks like this. Euro dollar a little weaker on the euro side of things, going into a big day for the ECB. Euro dollar 101.96. We're negative a third of 1%. A big day for the ECB, for European gas supply, and maybe even Italian politics too. I cannot keep up. Futures, Tom, down by just 0.06%, and yields down too by 5 basis points, 297.
We've been making jokes about it today, John. I've been a little guilty about this. Folks, I really can't emphasize enough how important tomorrow is. This is truly the most historic ECB meeting ever, wrapped into everything else, including the war, wrapped in Putin's trip to Iran and all that, John. Tomorrow we shouldn't take lightly.
We went a full 8 years with Draghi without a single rate hike, Tom.
Yeah.
We thought that maybe Lagarde would face the same situation. The answer to that is clearly no. What we're trying to work out is actually how far interest rates can go at the ECB, given everything going on all around her.
And the unpredictable right now, we turn, as we did with Amory Horton in the last hour, to this climate debate in a very hot America. Washington, D.C., normal, 101, 102 here in a couple days, but it is a serious issue. Greg Valliere knows the heat of our political discussion on climate change and joins us this morning. He's chief U.S. policy strategist at AGF. Greg, we all know the divide here in the debate. Is there any center tendency? Are the Republicans in the middle? Are the Democrats in the middle on climate change?
Frankly, Tom, I don't think they know what to do. Joe Biden probably today or later this week will declare a climate emergency. I'm not quite sure what that would do. Maybe he'll talk about banning exports or stopping any new drilling. But the Supreme Court ruling of about a month ago was really epic in the whole idea of regulatory policy. The court said that to have big regulatory changes, you've got to have collaboration with Congress. So even if Biden makes a strong statement today, I'm not sure he gets much done.
Who are you watching in Washington where anything gets done on climate change either way? Are you going to give me the gentleman from West Virginia? I mean, is he the climate czar of Washington when everything's said and done?
To a certain extent. I mean, Joe Manchin's influence has been just enormous. He's enraged Democrats, as you know, and I think that his clout will persist. Frankly, I don't see much improvement on environmental policy, and I've got to conclude that the environmental movement is in tatters. This year, there's so much, as you and John were just saying, there's so much going on, but one of the big stories this year is the collapse of the environmental movement.
Okay, so the environmental movement is in tatters. What about the Democratic Party, which, to your point about Democrats being so angry at one of their own, Joe Manchin, who seemed to have issues with the policies or, not pushing far enough on the part of the Biden administration? The Democratic Party itself seems quite fractured.
They sure are. And basically, they don't have the votes to get much done. And you've got an environment right now where voters care more about the price of gasoline, which has come down a little, than any other issue. And I think because of that, people are willing to look the other way on environmental stuff, even fires in London and temperatures over 100 degrees, because they want lower gasoline prices.
Well, and obviously that's going to color the midterm elections in November in a very big way. When we look out to 2024, though, Greg, is there anyone in Washington who would like to see President Biden run for re-election, including those in his own party?
Very few. In public, I think a lot of Democrats say, you know, he's the nominee. We're not going to oppose him. In private, you talk to a lot of Democrats who are quite blunt about Biden's age. It's harsh to talk about that, but I do think that most Democrats would like to get a fresher face.
Greg Villiers, I looked at a chart today of the drop of the water level near the Hoover Dam. And it's precipitous is the word. There's no comparison all the way back to 1942. How do Republicans frame climate change in the geographies where there's a lot of Republicans and without question, there's climate change?
A lot of Republicans don't believe there's climate change. A lot of Republicans think Donald Trump won the last election. I mean, there are attitudes that you have to look at as big political factors.
Yeah, but Greg, the water level of Hoover Dam is not a theory. It's measurable.
I know. 100-degree temperatures are not a theory either. And I would add that I think the next big crisis, I hate to say this, is California, which still has not had the winter, the summer fire season. I think fires in California in August are going to be a big issue for a state that's running out of water, dramatically running out of water. And you have to wonder, is there some cure here? Is there desalinization? It's really expensive, but I think desalinization might come back into the mix of policy options.
Greg, also want to get your view on things, as always. Greg Valliere there of AGF Investments. TK, seemingly every time you look anywhere right now, it seems to be problematic. The doom and gloom, you're always saying it, Tom. How much doom and gloom is out there at the moment in every aspect of every conversation?
You know, you got to battle it every day, and particularly late pandemic here, even with a little bit of the variant issue going on now. I know with the kids every day, you know, seriously, John, you got to find the optimism that's out there. John, can I do a surveillance correction?
Sure.
I was making jokes about Bramo on her trip.
Right.
I had no idea.
Is she right in?
It's like what you do if you go to Everest and you're not going high up. You go from Kathmandu, and it's a really huge hike, and you do some airplanes with it as well. But she's going as high as 18,000 feet. I had no idea.
Have you got confirmation of that?
Yeah, I've never been that high. I've been up to like 12,000 feet, and I didn't feel good. That's like way up
and
there.
And you had Katie reading calculus to get ready for the show.
Yeah, but seriously, John, 18,000 feet. I don't think she needs oxygen, but you know, maybe she needs a cream ale. But the bottom line, John, is I really just had no idea how high you go on a casual hike if you just decide to go to Nepal.
Is she going to take a week off, Tom, afterwards to recover?
Why not? That seems to be the new habit.
That seems to be the theme. Equities right now down 1/3% on the S&P. On the Nasdaq, we're down 1/4%. We will keep things on the rail for you tomorrow. The focus will be on Europe, an ECB rate decision, a bond buying decision when it comes to some kind of anti-fragmentation tool. The latest on Italian politics.
Transmission protection mechanism.
There we go. That's great all round, guys. Put that in a promo. On top of that, we need to work out what happens with European gas. Do you want to take us out with that doom, Tom? Anti-fragmentation tool. Go on,
no,
you've got
I
that.
looked it up in
voiceover?
Italian. It's fragmenteco or something. I can't pronounce it.
Nice.
of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
From New York City this morning. Good morning. Equity futures just a bit softer. We're down 1/3% on the S&P 500. On the Nasdaq, we're down by 0.2%. Yields are lower by, let's call it 7 basis points and round down for you to 295.40 on a 10-year, down 1.8% on crude, 102.33. Big spat over energy supply out of Russia into Europe. That will continue, perhaps even conclude tomorrow. We'll look out for the latest there. Euro dollar 101.92. We're negative 1/3%. Weaker euro. Just want to keep you up to speed on Netflix. That stock was higher by 6 or 7%. It was flying, now up by just 5%. Just rolling over a little bit in the last 30 minutes or so after they skipped over an extremely low bar. We were looking for a 2 million subscriber loss, and Tom, we got something like 1 million subscriber loss.
I was talking to Paul Sweeney about this, and Paul said, forget about the financials. What's the Rotten Tomatoes on this new $200 million epic they've got coming out? And the answer is it's not very good.
What is it? Stranger Things?
No. That's
the old one.
Afterthought is watching Stranger Things. She wants the name changed to 12. The Gray Man.
The Gray Man.
Something like that.
Don't we rely on Kaylee for this?
No, well, Kaylee's the Scarlet
She's sort of super into Peaky
surveillance.
Blinders and all of that stuff.
That's true. And Ryan Gosling, who I believe is in that feature film.
Gray Man.
Gray Man.
Okay.
Comes out Friday.
So it's a movie?
Yes.
Right, thank you.
Oh, it's a movie. It's not like a series?
I think
we're revealing how much we actually know
real quick.
about this.
We're on Netflix.
Cool.
Let's save ourselves right now. Futures negative 10. Dow, I'm sorry, folks, the VIX is 24.60, and that is testament to what we've seen over the last 3-4 weeks as well. Blarina Urici is a U.S. economist at T. Rowe Price with a really different outlook. And what we haven't talked about this morning, Blarina, is the labor market. And I want to talk about all the gloom that's out there amid 3.6% unemployment. You lead with that in your note.
Absolutely. I think I'm taking a lot of signal from the health and strength of the U.S. labor market. It surprised us consistently to the upside this year. Job creation at 350K per month on a 3-month average basis. We know the Fed looks at this. It's pretty strong, and the unemployment rate is all the way down to pre-pandemic levels when we know we had a hot and very strong labor market. I think the labor market will matter a lot for the outlook of the U.S. consumer and their confidence to continue spending in the coming quarters. So from that, I think the doom and gloom on recession is a little bit exaggerated at the moment.
We parse inflation as services and goods. How do you parse the labor economy? Is it the recovery that we saw in restaurants and bars was a theme a year and a half ago or so? Where is that persistency of good news in labor now? What part of our labor market?
So what we're seeing is a broadly based growth in job creation. And I think this is what kept job growth going for so many months. Now, this could turn around quickly, especially if we talk ourselves into a recession. But for a moment, I think let's pay attention to what we're hearing from companies, their hiring intentions over the coming few months. And right now we're seeing hiring freezes or small job cuts predominantly in the tech and finance sector. I think if we see this being more broadly based in other sectors of the economy, this is when we need to start getting worried about the outlook for the U.S. job market.
Can we talk about the housing market as well? Because we've had a series of data points that just point to a really dramatic cooling. And Diane Swank, who's now chief economist over at KPMG, was talking about how we saw mortgage demand dropping to a 22-year low in data this morning. She says the canary in the coal mine has lost its song. The correction in housing, the most interest rate sensitive sector, is leading the economy into a more significant slowdown or worse. Should we be more worried about how quickly the housing market is cooling off?
I think this is a great question. We should focus on two things in the housing market. We're seeing a deterioration because of bad affordability. Homes became very unaffordable for households because of the very fast home price appreciation post-pandemic and because of higher interest rates. We know the housing market is one of the most interest rate sensitive sectors of the U.S. economy, but we should be careful to extrapolate what's happening with home sales to the broader economy. We know this is one of the most interest rate sensitive sectors, but I'm at this point not convinced that this kind of dramatic slowdown is going to spread to consumer spending because of how healthy their balance sheets are, how healthy the labor market is, and their ability to absorb some of the inflationary hits in the cash buffer that we know they've accumulated.
But given that, doesn't that mean that the Federal Reserve's job in trying to rein in demand in order to get inflation down is then that much harder? Is the U.S. consumer too resilient for them to be effective in doing that?
I think therein lies the problem for the Fed. We have a very strong economy, and they're trying to walk this tightrope of bringing inflation down while the unemployment rate only picks up a little bit because this will be absorbed in the job openings that are at record highs at the moment. I think we should be prepared for a Fed that needs to hike more than the markets are anticipating right now.
Lorena, your job at T. Rowe Price is to talk to portfolio managers about sector bets and even individual stock bets, and it starts and ends with unit dynamics and price dynamics of the revenue line. What are you telling them about what revenues will do over the next 12 months?
So I focus a lot on the U.S. consumer, and we've spoken a fair bit about it already today. And so I think what happens with consumer spending over the coming months will be key for our revenues. Of course, we're going to have a correction from the levels that we saw last year that was unsustainably high spending for the U.S. consumer, but we're shifting our view to focusing more on the services sector where we think the economy is going to rebalance and towards those staples as activity normalizes and all the pent-up demand on goods and services gets absorbed, focus on those necessities and non-discretionary spending for the consumer.
Well, if the consumer's there, and I see Atlanta GDP, not Atlantic, Atlanta GDP statistics that are really quite gloomy. Should we trust those statistics, or is the resilient consumer going to surprise all?
I think we with every data report, we should really look under the hood and see what the details of that report are telling us. And what we're seeing in the NEPA accounts, in the GDP numbers, is that a lot of this weakness and volatility is being driven by inventory restocking and destocking, by net trade, two components that tend to be very volatile. So over the coming months, we're going to sit here and discuss at great length the signal from GDP versus GDI data. Should we focus on personal consumers and domestic sales? And I think there's going to be a lot of debate on this, but ultimately we should focus on consumer spending, and we should focus on how fast jobs are being created in the economy.
Well, something else we're likely to debate over several months is what size Fed hike we're going to get at any given month. But perhaps the more important conversation is where we ultimately are going to get. We've heard from Blackstone in the last 24 hours saying could be close to 5% on Fed funds when all is said and done. Jim Bianco agreed with that take. So I guess kind of a three-part question. How high do you think we get on Fed's funds? At what point do we reach it? And for how long do we stay there before the cuts follow?
So I think that we probably get to 4% interest rates by the end of this year before the Fed takes an opportunity to pause and see the effects of tightening financial conditions on the labor market and on inflation. And then I think risks for next year are pretty wide. If the economy continues to grow and surprise us to the upside, 5% interest rates, it's not unthinkable. If the Fed thinks this is necessary to bring inflation down, they will go ahead and do that. They've told us they really prioritize price stability at this point. When I look at market pricing, I think they're being a little bit too sanguine about the Fed cutting interest rates already next year. I don't think it's going to be as simple as that in this business cycle.
Sonal Desai of Franklin Templeton said pretty much the same thing to us recently. Florinda Urici there, the US economist, the T. Rowe Price, echoing some of that from Sonal, and also Andrew Hollenhorst of Citi, Tom, looking for 4% year-end on Fed funds.
I'm glad you're bringing this up, John. This is still not in the market at all as a set of people looking for a terminal rate above 4%. It's just not priced in.
We're talking about rate cuts next year, and some people saying that's premature. Right. Next week, Tom, Fed decision Wednesday, GDP the day after.
Well, the GDP number is going to be a big mystery. I like what we heard earlier from, maybe it was Scott Clemens, where there's a gap there between Fed meetings where we get a lot of data. Margot Rubin with our affiliate BNN, John, in Canada, 8.1% inflation back to January 1983.
Downside surprise, though, no. Tom, on a month they hiked 100 basis points.
Yeah,
so,
you know.
Timing. I know, there's some work to do, Tom. These are numbers we haven't seen in a long, long time. Likewise, the UK. Yeah. You mentioned that briefly this morning. New 40-year high.
Can I note curve inversion, breaking down, breaking ever more inverted, except for one day?
I'd say the whole curve, Tom, shifting lower this morning. It's just the 10 years coming down a whole lot more. We're down 7 or 8 basis points already, sub 295 on a 10-year.
Well, sub 295, but the 2-year yield at 3.17%. To me speaks volumes. I don't know. We don't get economic data here. It's 8:40. I guess we missed that, right? No economic data today.
What are you looking for, Tom? We get existing home sales at 10 a.m. We had mortgage applications earlier this morning. Okay. They were soggy, down more than 6%.
I like that.
Soggy. Soaking wet.
Yeah.
Coming up, Troy Gayeski. I'll catch up with Troy. We'll talk about markets, believe it or not. Troy doesn't think that this market mess is done with, that there's some more volatility still to come.
Everybody's got an opinion.
Well, that's his opinion. We're going to talk about Troy's opinion, Tom.
He never
that's the whole
comes
point.
on with me.
He does. He comes on Bloomberg Surveillance.
He's like El Arian. They won't get up early.
Well, Tom, you're rude about him sometimes.
He's made an appearance on Bloomberg Crypto, too.
I bet he has. Got a lot to say
am
about
I
that, too.
Did you survive the show yesterday, Kaylee?
I did, yes. Quite successful.
Good to hear.
I
saw some of it. Great work, as always.
Thank you.
Tom, have you booked the United flight from, is it Newark to Frankfurt? Have you done that?
I'm talking. I'm trying to leave right from here. I got to get I left my passport at home, so, a vet bill's going to bring it down.
Very cool. Your dog with your passport.
Yeah, it's like
a carrier pigeon, but with 4 legs.
I got to go. We're down a third of 1% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. The House has passed a bill that would recognize same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. In China, Premier Li Keqiang is signaling flexibility on the country's economic growth rate. According to state media accounts of Li's comments to global business leaders, he said the most important thing was to keep employment and prices stable. Li also said China would make its COVID control measures more targeted. And Tesla reports earnings after the closing bell today, and the electric car maker's run of rising sales and profit is under pressure. During the second quarter, Tesla faced challenges, including supply chain difficulties and lockdowns in China that hurt its ability to make cars. And JP Morgan Chase reportedly plans to move 1,000 back-office staff from London to either Paris or Frankfurt. That's according to French financial newspaper Le Séchos. JP Morgan's Paris office has expanded significantly since before the UK quit the European Union. The ECB has been pushing US banks to increase their EU-based capabilities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Valuations are at a much more reasonable place than they were 12 months ago. I think we're closer to a bottom. I think the market's in the process of making a bottom, but all of the conditions that led to the volatility, unfortunately, they have not gone away yet.
Russ Kostrich, always smart, portfolio manager at BlackRock, barely describes how he synthesizes in where we are in the market with his opinion, the BlackRock opinion as well. Kaylee Lyons and Tom Keene here on a Wednesday. I've called it a snooze fest. Actually been very interesting was certainly the political statement of the day out of Brussels and Ursula von der Leyen really talking about the Nord Stream issue. It moved the markets. Green on the screen has become red on the screen with some weight. I'd really note curve inversion, negative 23 basis points is out there this morning, a greater curve inversion. The 2-year yield higher than the 10-year yield. I think I'm getting that right. Ira Jersey has to help me with that. I usually get it.
Sounds about right, Tom.
Wrong. Right now, we are going to advance to a study of the advanced decline line with Kriti Gupta. Kriti, what do you have?
Well, Tom, we got to take a little bit of a blast to the past. In the last 24 hours, yesterday's rally was so significant because it was the broadest going all the way back into 2020. And that brings me to my chart of the day, because traditionally when you see that kind of broad rally, it is good news in that there isn't necessarily a defensive tilt or perhaps a cyclical tilt to it. The entire market is rallying, and on top of that, you had some high volume as well. So perhaps conviction buying on the surface. So my chart of the day shows just that. The advanced decline line, essentially how many S&P 500 stocks are positive minus how many ended the day negative. And really, if you go back to 2020, 2021, you see this massive rally. But of course, in 2022, with that sell-off, you've seen that advanced decline line really just stall out. So the question here is we do need to see a little bit more of that breadth to perhaps have that sustainable rebound. At least that's what we saw in the past couple of years. But I will also point out the other side of the argument, Tom, the idea that Chris Murphy over at Susquehanna, he said, well, yeah, we had a broad rally, 98% of stocks, they were positive. That being said, that traditionally, historically, has also led to some sort of correction or mini correction in the 1 to 2 weeks that follow. So really, two ways to read the situation here.
Kriti Gupta, thank you so much. Greatly appreciate that. Making the news this morning, viral on Twitter, was Kaylee Lyons studying calculus. We now go to the calculus of boredom, which is tartar and toothpaste. We can do that with Gina Martin Adams, Chief Equity Strategist at Bloomberg Intelligence. I want to talk about the calculus of boring toothpaste companies and the reality they face like others, and Netflix can't deal with it or others, which is margin compression.
Yeah.
How do companies deal with inflation and the margin compression it brings on the income statement?
Yeah, well, I'm happy to bring the boredom to the show here this morning.
Oh, no, I accomplished that earlier.
Nonetheless, at this stage in the cycle, you start to hear about cost cutting. You start to hear about cost cutting. You start to hear about cost rationalization. We've already heard it for several weeks running from the tech space. We're starting to hear it from more companies over the course of the earnings season. We've heard financials even talk about potentially cutting back on labor cost input. And increasingly, that's the way that companies accomplish ultimately creating stability in their margin lines. That said, the primary source of instability for margins has really been inflation and commodities costs. So they're going to get some support from that no matter what they do, because we have seen energy costs turn over. We've seen the grains turn over. We've seen the metal prices turn over. There has been some reprieve in commodity costs.
And folks, it's like Game of Thrones in season 5. Gina Martin Adams has like literally 3,000 people out on a floor, and, the smoke and the chemicals of making Bloomberg Intelligence. Within all the people you talk to every day, the marketing phrase I get is they're going to innovate themselves forward. Baloney. They never do that, right?
Not at this stage of the cycle. It really is about cutting costs to sustain margins. And then when they gather the confidence in the economic climate improving, they start to innovate and start to spend. Now, there are exceptions to that rule. Certainly, there are groups in the healthcare and technology space that spend an enormous amount on R&D and constantly are evaluating projects with a reasonable return on investment, no matter what the stage of the cycle is. But broadly, when we're talking about the S&P 500, in a time when operating margins are coming under some degree of pressure, they have to pull the levers that they have to pull to stabilize those margins. And I do believe we've finally gotten to this point. I mean, I've been talking about margin weakness for more than a year now, as analysts have just slowly started to pick away at their margin estimates. And we are starting to see roughly half of the industries in the S&P 500 with declines in year-over-year margin showing up in the real data. At that point in time, you would expect companies to start to rationalize cost.
Okay, so Gina, obviously you were talking about how they may get some relief when it comes to commodities prices coming down. We are seeing not really just kind of the dollar starting to come down, but it's still hovering around its strongest level going back to the early 2000s. How real are these FX headwinds? Because already, not that far into earnings season, we see company after company saying, yeah, it was FX.
Yeah, they're real, but there's not a ton that a company can do about those real FX headwinds. So for about 35% of the S&P 500 constituents, a stronger dollar is a very bad thing. A stronger dollar is going to translate into lower earnings because they do have substantial multinational businesses. Most of that dollar weakness or that dollar strength is coming via euro weakness, so it's particularly profound for companies that have exposure to Europe. That said, I think the underappreciated story here is the companies that are importing costs are actually getting a benefit because the dollar is so strong. So what I think you're going to see throughout this earnings season, nobody will say, hey, things got better because the dollar was so strong. But nonetheless, you've got several consumer companies, consumer staples, consumer discretionary, some select industrials companies that are heavy importers of product from overseas. To the extent they import and the dollar is rising, their import cost pressure is mitigated. That could be something of a hidden support to margins that nobody's really talking about that we might see emerge in the next few weeks.
Gina Martin Adams, thanks so much. Folks, a given toothpaste company, the name doesn't matter right now, 30 years per year, 14.6%, 20 years per year, a big 17.6% per year. The last decade, 14.2% per year. This is not Apple. It's not some fancy la-di-da, Bitcoin, whatever, boring toothpaste.
Yeah, nothing more exciting than oral hygiene.
Boring toothpaste is all that comes down to. Kaylee, what did we learn today?
Well, I think we learned how difficult tomorrow is going to be. That's the primary message of today, Tom.
John did a nice job of laying that out.
The ECB is stuck between a rock and a hard place as you have the question around what is going to happen with Nord Stream 1 tomorrow. If gas starts flowing, how much gas starts flowing? Then, of course, you have the question of Italian politics, what that is going to do to the BTP Bund spread. Does it blow out beyond 200 basis points? All of this, Christine Lagarde has to take into account as she is trying to hike rates to tame inflation. It is not a spot I would want to be in.
Well, a little bit of nervous here into the market. DXY's churned through the morning. We're not at that 108 level, which is strong U.S. dollar. The DXY index heavily influenced by euro back down to a 107, rounded up. Euro 102.06, intermediate up in a bear market. It's a nascent bull market. I'll let you decide as you watch Bloomberg and listen to Bloomberg through the day. But the fact is, green on the screen again like yesterday, and then down we went off Putin, Ukraine worries, I'll say. And we've come back a little bit. Futures at -4, Dow futures -38, and the VIX flattish 24.54 as well. Again, tomorrow, our coverage of the meetings of the European Central Bank and the press conference of their president, Lagarde. Stay with us. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Coming off the back of a big day of gains on the S&P, live from New York City this morning. Good morning, good morning. We are just a little bit lighter, softer, lower. We're negative 1/10%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, mounting hopes that the rout has bottomed.
I think we're closer to a bottom.
The markets have been repricing the rate momentum for a while. We have been repricing the dollar momentum for a while.
Valuations are at a much more reasonable place than they were 12 months ago.
We don't think that full capitulation has happened yet.
But it's true, things are improving, but all of the conditions that led to the volatility, unfortunately, they have not gone away yet.
The growth, the persistence of inflation, the degree to which credit has yet to react.
Have the same headwinds we've had for most of the year.
Tom Cruise is not going to just pull up on the throttle and save us from this nosedive.
But, man, there are a lot of really interesting opportunities starting to arise.
We've priced in a fair bit.
I think the market's in the process of making a bottom.
Joining us now to discuss is Invesco's Mo Hagbin, Troy Gayeski of FS Investments. Troy, in your notes, you think it's naive to believe the current struggles for markets will be over anytime soon. Why, Troy?
Yeah, well, look, markets are really stuck between the vice of tighter monetary policy and now diminished money supply, which has happened very rarely over time. So, if the economy continues to chug along and labor market stays strong, the Fed's going to have to continue to move very aggressively, drain the balance sheet exceptionally aggressively, which means much more multiple compression. The flip side of that is, given how fast the economy globally has decelerated, I mean, at the end of the day, the U.S. consumer is single-handedly keeping the global economy afloat right now. That could lead to a recessionary outcome, which, as you know, will mean not just not higher earnings, but meaningfully lower earnings. So it's a really tough situation for markets. We're in the midst of a mild bear market rally now. It certainly could go on at least until the VIX gets into the high teens, but it's very unlikely that we bottomed.
Mo, have we not seen enough pain?
Yeah, thanks, John, for having me. I agree with Troy. You know, I think there's a little bit of softening in the data, and the economic environment has been shifting. We registered a slowdown earlier in the month, and we have gotten a little bit more defensive on the equity portfolio. So that means up in cap, value, you know, is really not an overweight anymore in the portfolio, where it had been an overweight in the portfolio year to date. So we're higher quality equities, low volatility equities, but we still have a neutral stance. And I do think we need to recognize that if we do avoid a recession, some of that equity drawdown is pretty meaningful, and we might find ourselves closer to the bottom than the top.
Mo, I'd love to hear more about that. I hear this pessimism from people, and then I look at the positioning, and maybe they don't reconcile. Can't match those two things up. When you go through the fund manager survey at Bank of America, record low growth expectations, record low profit expectations, equity allocation the lowest since 2008, cash levels the highest since 2001. Bank of America's Jill Carey-Hall saying this: clients have continued to buy cyclicals but sell defensives. Inflation beneficiaries like energy have seen inflows, and substagflation recession beneficiaries like utilities have seen outflows. Mike, what do you make of that line from Jill Carey-Hall there of B of A?
Yeah, you know, it's actually pretty consistent with how our positioning was for the majority of the year up until the beginning of the month, right? So we had an overweight to low, you know, to size and value. We were a little more pro-cyclical in our stance. And, you know, surprisingly, that had been outperforming. So value versus growth, as you know, John, has been the trade. But, you know, more recently, you know, just given the softening in the data and just given some of the sentiment, we have actually shifted to a more defensive portfolio. I do think that those elevated cash levels and just the overall bearishness in the market could potentially lead to a shorter term rally in markets. But really what you need to be thinking about is, are we going to avoid a recession or are we not? You know, and then depth of that recession and the bounce back are going to be pretty important factors when you think about that positioning.
And will we get a Fed that's easing or just pausing if we do get that recession? And Troy, is a pausing of Fed hikes, is that sufficient to engineer a turnaround in this equity market? And do we need a turnaround in this equity market? Does it hinge on what this Fed does?
Well, yeah, so that's the challenge here, right? Is that as markets continue to go higher and yields drop at the back end of the curve, that's loosening financial conditions, which is exactly what the Fed does not want to have happen right now. So that just gives them extra impetus to move harder.
I think we've got a connection problem there with Troy Gayeski. We're going to sort that out with Troy over at FS in just a moment. We're looking ahead to earnings, not just after the close a little bit later, but also through next week as well, with big tech very much on deck. Going to bring in Taylor Riggs for a little bit more on that. Hey, Taylor.
You know, John, I think when you mention big tech, Netflix certainly stands out to me, because you think about going from a $700 stock, as Gina Martin Adams was co-hosting with us after the close, to a $400, to a $200 stock. Now, the earnings weren't maybe a blowout, but better than feared. Can we call that? That's something that Paul Sweeney, also one of our great sort of analysts, is saying as well. When you think about a market that's trying to find that bottom, as you've been talking about, and where we are in sort of pricing in all of that bad news. So Netflix, of course, is one that we're watching when you just think about how low it can go, and if this is sort of the bottoming out as we look towards some of the positivity, the return to the subscriber growth next quarter. Change of the board, because of course Netflix is one that we're going to be focusing on a lot, but sort of big picture, when you think about the market reaction and that bottoming, how are we thinking about so far? And I know that it's early in the earnings seasons, but the reaction, the stock reaction, has actually been pretty positive when you think about sort of the moves that we've seen after the huge declines in some of the big re-rating of those valuations coming into this quarterly reports. One thing to note, though, is when we think about sort of where we are, and again, I mentioned that it's a little bit early, updated through about earlier this morning, you do have about 70% of reporters now, of course, beating the consensus estimates. You've had about a little bit under that 5-year average, which is about 77%. But again, for the most part, you're doing a little bit better. And we talked a lot coming into this that expectations were too high. And I'm wondering if we're thinking that maybe expectations were set right and these companies are coming in and maybe setting us straight here a little bit.
Taylor Riggs, thank you. Looking ahead to earnings next week, Tuesday, of course, Microsoft and Alphabet, Facebook on Wednesday, Amazon and Apple on Thursday. A GDP print on the same day, just after a Federal Reserve decision next week. You've got enough going on next week. Seriously, what a busy week coming up. We caught up with Goldman's John Waldron, applauding the Fed's monetary policy. Take a listen.
You're seeing the Fed move quite aggressively, and in my opinion, very appropriately, to get on top of what's significant inflation building in the economy, and clearly trying to front load a lot of the moves, policy moves, to try to deal with inflation. And so we at Goldman Sachs are impressed with what they're doing. We expect them to continue to be aggressive in combating inflation. And I'd say so far, so good.
Always be nice about your regulator seems to be the takeaway there. Mo Hagbin, so far, so good. The message from Goldman to the Federal Reserve. Mo, the debate we've had on this program is how far this Fed needs to go ultimately. I've heard from a couple of people in the last 24 hours, 4% year-end Fed funds. Citi are on board. Are you?
Yeah, I think that's maybe a little bit more aggressive than what I would think would be kind of appropriate. It's a little bit of a wait and see. I think some of the Fed activity needs to trickle into the broader data that we're seeing. Inflation, for example, has a little bit of a lagged effect, and I'm not sure we've seen really that policy action fully reflected in the inflation numbers. And we are seeing some signs that inflation is rolling over. I think energy prices, some of the demand kind of destruction that's happened here is pretty healthy and as intended. The consequences, are really what was intended here. Are we going to see a 75 basis point move? I think the consensus there is pretty clear. From there, I'm not so sure. The Fed isn't going to think about not overshooting.
Mo, how instructive is the data at the moment? Because there is evidence inflation is going to roll over based on what's happened with commodities. There's also evidence that it's getting stickier based on what's happening with shelter and rental costs, to be specific. So which poison do you pick right now?
Yeah, John, I think what's really important here is not to think about the shorter term inflation number, but look at what's happening kind of 5-year forward or 3-year forward. And those numbers are actually quite stable and anchoring. So the long-term expectations around inflation in the high 3s to low 4s, I think, is a pretty reasonable assumption. And the question is how sticky is it? How transitory is it? I think we've moved away from the word transitory, but longer term expectations around inflation, at least what the market is telling us, is somewhere closer to 3 to 4%.
Mo Hagbin of Invesco is going to stick with us. Troy Garsky of FS Investments, we're trying to re-establish that connection. Once we sort that out, we'll get him back on. Jim Bianco of Bianco Research was on with me a little bit earlier this morning. Quote of the morning came from Jim. This year's people who are saying inflation has peaked are last year's it's transitory people. The message from Jim Bianco a little bit earlier this morning. Yields come in 6 basis points on a 10-year, 296 on a 2-year, down 5 basis points to 318. The curve just a little flatter, a little more deeply inverted this morning. Let's get you some movers. It's Taylor Riggs.
John, Romaine once told me last year inflation was transitory. He's never going to let that live down because he's still transitory in my camp. Take a look where some of the equity movers, of course, that you mentioned this morning. We have to start with Netflix, right? So yesterday after the bell, that indeed was the big one. Subscriber loss that was maybe half of what we thought and maybe returning to growth, albeit a little bit slower in the next quarter. Again, better than feared could be sort of the theme that analysts are thinking of when we're coming out of this and looking at that company. Bitcoin, Riot Blockchain, up from the depths of 20,000. We approached 23,900 on Bitcoins. You're certainly getting Riot Blockchain a little bit of a boost this morning, as well as a little bit of that reopening trade when we're thinking about Macau and the casino maybe opening up this Saturday. So that stock as well getting a boost. Baker Hughes, and this is a different one, John, because we've talked about the huge outperformance of energy year to date. This is a little bit of a miss here on the bottom line, about half of what analysts were expecting. And they are taking a charge on ending some of those Russian operations. That is a theme as well for some of these energy companies.
Taylor, thank you. Coming up in the next 24 hours, a massive, massive meeting for the ECB.
Will they go 50? Is it just going to be 25? The window of opportunity for the ECB to hike is probably going to be pretty narrow. So the ECB is in a very, very delicate position.
It would be easier tomorrow if the ECB was the only thing to focus on in Europe. It's not. That's next.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The ECB is kind of finding itself behind the curve and having to play catch-up.
Caught between inflation and the fragmentation risks in Europe.
Our base case right now is for a 25 hike tomorrow.
25 rather than 50.
50 basis point hike from the Bank of England coming up. I don't think we'll get that from the ECB.
Christine Lagarde has been so explicit in her Sintra speech that it will be 25.
President Lagarde, they're going to be very considered and very slow-moving.
I wouldn't be surprised if we did go 50.
I think they should do it. They won't.
They are now hiking rates into what probably is, well, we are on the brink of recession.
You heard Jim Bianco in that. I don't know if President Lagarde is going to catch on or not, but that was Jim Bianco in there, Bianco Research. A trifecta of cross-currents at play in Europe right now. Italian politics, Russian gas, and of course the ECB. A rate decision very much on deck. 50 basis points on the table with investors awaiting details on a new bond buying plan. This as Europe starts preparing for a winter without Russian gas.
To make it through the winter, assuming there is a full disruption of Russian gas, we need to save gas to fill our gas storages faster. And to do so, we have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us.
Mike McKee, what a complicated 24 hours coming right up.
Absolutely. Let me start with a question for you, John. Christine Lagarde makes about $500,000 a year. Would you take her job right now?
As a policymaker, I'd rather be Chair Powell. No, I've just got to keep hiking, and then at the end of the term, I'll go around and get $1 million for speeches. Well, I think that's the job that I would want.
That's a better way to put it. I might myself go for selling sweaters in Brussels, because yes, they're going to have a big problem with Russian natural gas. Ursula von der Leyen, you heard her say today that things are going to be bad. They are preparing for a worst-case scenario, and this happens before the ECB meets tomorrow. The gas is supposed to be turned on. Nord Stream 1, the pipe that comes from Russia, has been turned off for a couple of weeks while they do maintenance. Vladimir Putin said today it's coming back on, but you're only going to get 20% of its capacity for right now. So the EU, worried about all that, says the continent needs to cut its natural gas consumption by 15% over the next 8 months. It's voluntary, but if they don't get it, they'll make it mandatory. The Italian government is also on the agenda tomorrow before they get to the ECB meeting. And as a matter of fact, we may know today, the ECB is trying to come up with a crisis prevention tool so that if Mario Draghi goes, or if there is a big problem in the economies there, we don't see spreads blow out like they did back in 2011. Christine Lagarde can say whatever it takes, but will the markets believe it? And there are questions about the legality of all this and expectations it would be contested in court. So it's going to be interesting to see what they come up with. And then here's what you're looking at, John, in terms of expectations. Now, there is a little bit of an idea of 50 basis points built into the market, but the consensus is 25 at this point, given the fact that they're balancing between the highest inflation ever in the Eurozone and this possibility of war-led recession because of energy prices. and at the same time, falling governments.
This is difficult. Mike McKee, thank you. And you saw on that bar chart the prospect of this ECB getting to 1%. How on earth do any of us know where this ECB goes, given what's happening right now, given the variables? Mike McKee just went through some of them. Energy out of Russia, Italian politics being another. Deutsche Bank basically saying that forward guidance is dead. They say this: a consistent learning this year is that forward guidance can rapidly go out of date in a rapidly rising inflation environment like this one. If it does deviate from the signal and hikes by 50 basis points, the ECB will prove that it's genuinely in data-dependent mode. Mo Hagman, Troy Gayeski back with us. Troy, we lost the line, so we'll come straight back to you. The ECB tomorrow, what are you looking for?
Yeah, 25 to 50, obviously, you hit the nail on the head. We've had so many issues this year around growth versus inflation. Obviously, the Fed's in a very tough position. But think about the poor ECB, right? You have the Italian government potentially falling. Draghi's being begged to stay on board. So we could have another Eurozone crisis in front of us, which no one expected even 4 weeks ago. Record high inflation, collapsing German industrial economy driven by the highest energy prices, in the globe for a manufacturing economy. And without Germany in that strong position to keep the Eurozone afloat, it's become another bear case for the global economy, a peripheral spread issue and another mini Eurozone crisis, which is just another terrible data point.
And Mo, that's what's interesting for me from the US perspective. Do you sit here, look into Europe and say, here we go again, I'm not putting money there? Or do you sit here, look into Europe and say, here we go again, this is going to be a problem for us too, in the States, in US markets? Which one is it?
Yeah, look, I think anything that's going on, more regionally is going to have a broader impact on the global economy. And to Troy's points, there's a lot of negativity and kind of weakness in some of the variables that we're seeing. I mean, tomorrow it's a coin flip, right? So 25 versus 50. I think expectations are 25 because of the signaling, but there could be a very big surprise there around that. And honestly, maybe that's where we need to go. And it is going to be interesting to understand a little bit more around the anti-fragmentation tool and what exactly are we going to do in case of a sovereign debt crisis like we've seen in the past. And really, that's a debt servicing issue, right? So look at Italian debt yields around 4%. What do those numbers need to get to before that becomes unsustainable? And I think that's the big question. I would say that the sentiment is probably a little bit overly negative. So from a positioning standpoint, valuations are actually quite attractive. So it is kind of interesting when you think about U.S. equities versus international developed equities. And to us right now, it's a little bit more attractive internationally, although we have a underweight in emerging markets.
Would you like to play that international story out of Europe? Is that what you're saying, Mo?
Yes, exactly. Right. I mean, I do think that they're probably a little bit more priced for kind of the overall slowdown that we're seeing. So, equities have taken a little bit more of a hit than we have in the U.S. And if you kind of think about the re-rating, you could kind of attribute most of that drawdown in equities to the re-rating of growth and really just the discount rate, not necessarily pricing in a recession. I think in Europe, there is more of a recession priced into asset prices.
Not just Europe we've got to worry about. Troy, we've got to think about China. They're calling this a loan boycott in China. I'm told, Troy, that it's spreading. I can't make a call on Europe without making a call on Russian gas. And I've said this repeatedly over the last week. How can you make a call on the global economy without making a call on what happens, one, with the housing market in China, and two, whether President Xi decides to reopen that economy or keep it largely locked down through most of this year?
Yeah, the level of opacity out of China is at all-time highs now. It's always difficult to evaluate how their political system's moving with capital markets. But the good news is, if you want to call it that, is they do have the resources to address the mortgage crisis. They are taking steps to, potentially bail out the developers in order to get completions of the homes. So that's been one mild positive in a sea of mainly negative news recently, but very difficult to say with any precision or certainty that China will be a stimulus driver for the global economy anytime soon. And you think back the last 15 years, there have been many periods where China's stimulus has almost single-handedly pulled the Eurozone in particular, but also the global economy out of more dire outcomes. And now it's just highly, highly unlikely as they try to balance COVID zero, Xi's command and control economy, a fragmenting financial system. So a very, very challenging place to be. And, that's why at the end of the day, in markets like this, you got to focus on preserving capital, being senior in the capital structure, letting the Fed do some work for you by being in high grade, high quality floating rate debt. And because a lot of these questions, John, we can ask them, but very difficult to have precision over the end result.
I couldn't agree more. Troy, awesome to catch up. Apologies about the line and the connection. Troy Gajewski there and Mo Hagbin. It's more than just 25 or 50 basis points from the ECB. After 10 years plus of waiting for a rate hike, it's amazing to sit here and think that maybe the biggest deal for Europe right now is not what the ECB does. It's what happens with Russia and Russian energy supplies. And ultimately, to Troy's point at the end there, China has bailed out global growth repeatedly, many times, with a big surge in credit impulse at times when we've needed it most. Is that actually going to come around anytime soon? Can you make those kind of predictions? To Troy's point, these are questions we don't have the answers to, but we've got to work out the right questions to ask. And I think the right question to ask right now is perhaps not whether the ECB goes 25 or 50. It's what happens to those other two things. Coming up, the morning calls and later, big tech earnings off to a strong start. Netflix moving higher after reporting better than estimated results. More on that coming up. That stock's up by just 4%. Plus, BlackRock's Gargi Chowdhury joins us at the opening bell. Looking forward to that. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Minutes away from the opening bell this morning. Good morning. Equities now unchanged on the S&P, slightly positive on the Nasdaq. That's the price action. Here are your morning calls. HSBC upgrading Chevron to a buy, 167 price target, seeing an attractive valuation following the stock's recent correction. Next up, Morgan Stanley and Wells Fargo trimming their Apple price targets ahead of next week's results. Both of the analysts expecting a surge in dollar to weigh on quarterly profits. And finally, Stifel upgrading Netflix to buy after earnings, saying a prolonged period of subscriber losses is now looking unlikely. Coming up, Netflix providing a strong start to big tech earnings, if you can call it that, after skipping over a low bar. That conversation up next with BlackRock's Gargi Chowdhury.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
24 seconds away from the opening bow this morning. Good morning to you. This Wednesday morning, here's the price action. We erased some of the losses from earlier on, post those headlines from Ursula von der Leyen out of Europe. Futures basically unchanged. We're positive 0.05% on the S&P, on the Nasdaq 100, up 0.1%. Leaving behind a really strong day of gains yesterday. Look at a build on them this morning. Switch up the board and get to the bond market. All morning, yields lower on a 10-year, much lower by 5 or 6 basis points. The 296.15, the euro, all over the place, going into a crucial 24 hours for this ECB. What on earth are they meant to do tomorrow? Euro dollar 102.32. We're positive there, 0.05%. The dollar just about weaker for a 4th straight session. And crude negative 1.5%, 102.65. We're down about $1.60. About 25 seconds into this one, we're pretty much dead flat on the S&P. Let's get you some movers. It's Taylor Riggs.
John, there are some movers underneath the surface. I want to start with the trio of downgrades over at B of A. Some of the network stocks, Juniper, F5, Arista Networks. The analysts saying, of course, that investor expectations not aligned with the forthcoming deterioration in the financials. Juniper, as you can see, they're off about 2%. ASML, sort of the chip-making company, big miss in terms of cutting the sales forecast, saying that there's some huge supply constraints that still exist. Citigroup, though, coming out saying that visibility does remain strong, though, for this company into 2023. Netflix, we've been talking a lot about it, but erasing some of the big moves that we had post-market after the bell. I'll kind of leave it there. It's a stock that's gone from 700 to 200. Market trying to figure out the fair value of the stock. Finally, Tesla, of course, that is going to be the focus after the bell today. Not only the distractions from Elon Musk, but maybe some of the fundamentals, the COVID lockdowns, and of course, some of the big costs to ramp up all of that production.
Taylor, thank you. Should we get you some more from Shanali? We can do that on a big bang, sparking the biggest 2-day rally for the S&P 500 since 2021. The financials ran in for 3 days. Hey, Shanali.
John, just how far we've come just in a couple of days here. You have Goldman Sachs, for example, since the end of last week, leading the pack with an 8% gain in its stock. And that is more than 4 times what you're seeing in the S&P 500 in that time period. And you're seeing other financials also get a lift because, as UBS's Selena Marcelli says it is not a plunge, it's a slowdown you're seeing in the earnings here. And you see that slowdown right there. So even though that slowdown is happening, the reason it's not really spooking investors, as you know, sometimes a reset in valuations can be very welcome. You had Goldman Sachs' John Waldron just speaking to Bloomberg Television yesterday saying it's important to reset the price of money. We've been living in a very unnatural environment for some time now. David Solomon just earlier this week talking to investors about how that resetting that price of money might be a little bit painful in the short term, but at the end of the day, once investors get used to that new price of money, you can see activity start to resume again. So as you see there, yes, banks have really sold off in the first half of the year. You have Goldman Sachs, Wells Fargo, Bank of America now comfortably above book value with this recent gain in their stock prices. Remember, heading into earnings, they were trading below. Maybe that is fair value, John.
Shanali, thank you. Distracted by the price action of Netflix right now. Forgive me, Shanali, but thank you very much. We're basically unchanged on the morning, about 2 or 3 minutes into the session. This tweet came from Casey Hunt, a CNN anchor. Covers politics here in America. Here it is. Re Netflix. I feel like markets could learn a thing or two from political reporters who become master detectors of BS expectations management. But what do I know? I mean, think about it. We were guided to a loss of 2 million subscribers and they delivered a loss of 1 million subscribers. That is hopping over a very, very low bar. These problems are going absolutely nowhere. Let's get some more on this. Let's get to Kelly Lyons. Hi, Kaylee.
Hey, John. Well, it seems that investors were kind of realizing that this morning with the stock well off its pre-market highs, barely clinging on to a gain here because, as you say, the news wasn't as bad as it could have been, but that doesn't mean that the news was great because they still lost almost 1 million subscribers in the second quarter. Nonetheless, what's interesting, while Netflix hasn't been able to hold on to those big gains it saw earlier on, some of its peers in the streaming space have been able to do so. Disney, Paramount Global, each up about 1% here. And the thing about that subscriber number on the headline, yes, 1 million losses. When you look beneath the surface regionally, they actually did lose 2 million subscribers in the US, Canada, in EMEA. What came to the rescue is the Asia Pacific, where they saw additions of about 1 million. So that helped them on the pure subscriber line. But when you have the rescuing coming from foreign markets, John, then you start to deal with the FX headwinds. And as a result, Netflix reported $430 million lost due to FX, specifically a stronger dollar in the quarter. And of course, that isn't a Netflix specific story. So far this year, as we've seen the dollar rallying up about 9% on the year, stocks with foreign exposure have actually underperformed the S&P 500. The S&P Foreign Exposure Index down about 20% year to date. And what are the largest weightings within that index, John? Apple, Amazon, Microsoft, all of the tech heavyweights that we were reporting next week. And of course, we'll be watching for any FX commentary in those results.
What a week we got coming up, Kelly. Looking forward to your coverage of it. Kelly Lyons with us all week as well on Bloomberg Surveillance with Bramo out of the building. Bramo's going to be back next Monday. This from BlackRock's Gargi Chowdhury. Gargi saying this: central banks are reckoning with a trade-off between tamping down inflation and destroying demand, thereby increasing the risk of recession. Whatever happens, our view is that the market risks are set to rise and investment horizons are likely to shrink. Gargi joins us right now. Gargi, your line and your message over the last few weeks, why you think we need to live with sustained inflation. Just build on that for me.
Sure. Hi, good morning. Good to be here. So, we've spoken about this before, this idea that inflation, while it may not last at today's 9.1% headline levels, hopefully, it's certainly not going to go back to the pre-pandemic period of sub 2% or around 2%. And honestly, what we're recognizing now, especially when we see the data, and we saw that in CPI earlier last week, is that the deceleration is probably going to be a little slower than what we had originally anticipated. And what we're seeing now in the data is that the strength is coming in some of the more persistent sectors of inflation, some of the more low volatility part of the CPI component. So shelter inflation, for example, once that starts moving up, it continues to stay high for some time. So back to our mid-year implementation guide that you were talking about just a second ago, all of that points to inflation remaining above the 2% level that we were used to for so many decades for a couple of more years to come. And that's why investors need to think about how to hedge for that higher inflation regime.
One way of doing that is through tips, obviously. A question that I've asked before, I'll ask it of you, Gargi, is a bet on tips a bet against the Federal Reserve?
So, there's a few different ways to think about this. Number one, when you think about owning tips, it's obviously you're getting duration. There's real duration associated with owning tips. And obviously, we know what's happened to interest rates. Real interest rates have gone from a negative 100 basis points to about a positive 50, 60 basis points, depending on where you look at the curve, or even higher as you go further out. So part of the message that I have had for investors is when you're looking at tips, be very cognizant of the real duration aspect. And if you expect inflation as well as interest rates to keep moving higher, hedging away your interest rate exposure. So having that exposure to pure inflation. What we're actually telling clients more and more now is to play for the very front end of the TIPS market. So really looking over the next 2 to 3 years instead of the full benchmark. And shorter duration TIPS or STIP, what that gives you is that front end inflation. Now, you asked a really important question around, is it betting against the Federal Reserve? I wouldn't put it that way. I think the market's already, what we're seeing right now in the inflation break-even markets is that there is no pricing in of inflation spiraling out of control. There is a lot of central bank faith on them being able to control inflation right now, which I think is good. We want to see that. But I think we might have moved a little too far, especially in the 2-year sector. So having some allocations to inflation-linked bonds in the very front end of the curve versus a nominal counterpart makes a lot of sense.
So, Gargi, elsewhere, not just break-evens rolling over, copper down over the last few months, crude down, gasoline down. I know you think supply shortages are here to stay. Can you build on that theme and tell me that if this inflation story rolling over to the extent that it has done is a bit of a head fake, where else would you look to pick up the pieces?
Sure. So, to your point, obviously, we've had some of that demand destruction, and some of that has come in the commodity space, and obviously crude comes to mind. And that probably is one of the reasons that, we have a little bit of comfort of headline inflation coming down from these very elevated levels. But some of the other ways that you can sort of think about how you can position yourself for some of the shortages, both in the short term and in the medium term, obviously the war has brought about some shifts to how we consume goods and services and how we will for some time. And where I have spent a lot of time thinking about is actually the food space. Right, so we've looked at food CPI, we've looked at what's happened globally. Sri Lanka comes to mind when there is food insecurity, and allocating towards longer term trends, which companies that are looking to alleviate reliance on traditional food, and we have an iShares sticker for that, iVeg, which really looking at food, sort of plant-based proteins, things like that, which are still, I would call it, emergent technologies within the food space. I think that makes a lot of sense. And obviously the energy space as well. Look, obviously commodity prices are lower right now, but some of the demand supply that has led to energy prices being where they are haven't gone away. And I think when that reinserts itself, when the economy globally fully reopens, I think investors need to still find some refuge in energy companies that are going to benefit from structurally high energy prices much above the pre-pandemic levels.
Gargi, I was also going through your research and you brought up the geographic bet. There's a part of all of this, and what popped up was Mexico and Brazil. Why those two countries?
Just in terms of if you think about which countries are going to benefit from commodity exports, which countries are going to benefit from this friend-shoring concept, and the word obviously taught to us by Janet Yellen, those are the two that come to mind. And we think that, again, investors, especially if you're an investor that's looking at the fixed income of those countries, I think it makes a lot of sense. So it's a commodity story. It's also a friend-shoring story. I mean, we're all talking about supply chain disruptions. We're all talking about supply chains being more resilient going forward. We're talking about supply chains moving away and coming closer, whether we want to call it onshoring or friend-shoring. And what are some areas of the market that can benefit from that? Certainly Mexico is one.
If those two countries are a buy, is China a sell?
I think there's obviously, we've seen recently some regulatory news that has come out. I would also say that there's a huge amount of focus on cases and COVID cases going up, to what extent the country can really effectively vaccinate the elders within the country. And I think those are signs that we're watching. Obviously, if we see a great amount of vaccinations taking place and COVID cases continue to drop, I mean, that bodes very well for China, but that's currently not the case.
Gargi, awesome to catch up, as always. Gargi Chowdhury there of BlackRock, breaking down her views on inflation is here to stay, and why she still has that position in TIPS, and why she thinks you should too as well. We look ahead to next week with big tech earnings on deck. Apple at the back end of the week. I talked about those analyst calls on Apple a little bit earlier this morning. Let's face it, the price target cut's down to 180. 180 is still pretty punchy, but the direction of travel is clear over the last couple of weeks. Morgan Stanley come down to 180 from 185. Wells Fargo comes down to 185 from 205. And the key theme here, foreign exchange, pops up in both of these reports. This from Wells Fargo. Overall, we see a worsening COVID situation in China and beyond, a deteriorating macro environment, increasing FX impacts as the biggest risk to near-term estimates. On foreign exchange, Julian Emanuel of Evercore had this to say: the strong US dollar has emerged as yet another issue for companies with international exposure. IBM and J&J both flagged dollar headwinds, echoing Microsoft's prior warning. Julian concludes by saying this: can FX damage be relatively contained as an extended dollar shows signs of peaking? If it indeed has peaked, Morgan Stanley are looking for 112 on the dollar index, which means some big upside from here, given that we're just short of 107 at the moment. That's a story to watch into next week. Story to watch right now, coming up down in D.C., President Biden turning his focus from inflation to climate change.
The president is committed to taking aggressive action to tackle climate change and made clear if the Senate won't act, he will.
That conversation up next.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes, como tienen planteados el plan director urbanístico.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The impacts of extreme weather are intensifying across the globe, including here in the United States. No one is immune from climate change. The president is committed to taking aggressive action to tackle climate change and made clear if the Senate won't act, he will.
President Biden announcing climate change action today in Massachusetts. This is falling gasoline prices, ease pressure at the pump. The White House running in a news release the following. The president will deliver remarks on tackling the climate crisis and seizing the opportunity of a clean energy future to create jobs and lower costs for families. Anne-Marie joins us down in D.C. for more. AMH, tell me what's going to happen today.
Well, the president's going to outline some plans, Jonathan, things like bolstering the wind industry, offshore wind industry, also maybe directing some more funds to communities that are trying to build resilience to natural disasters. But he's not going to go as far as declaring this a national emergency, which would give him access to more than 100 powers. National emergency, when that happens, it's the likes of a hurricane or a terrorist attack, that the president would have these broad powers to move a lot of different directives to fight climate change. That could be on putting more money into renewables or stopping the exports and transport of some fossil fuels, even stopping some oil drilling. So they're not going to go as far as that, but it means they're still weighing it. But they're really walking a delicate line because, of course, they're making this statement off of the heels of what happened last week, which is Senator Manchin saying he will not sign up for those provisions to fight climate change and tax hikes, but they still need his vote, of course, in a 50-50 Senate to sign on top of other legislation they're discussing in the healthcare space. So he will outline plans that they're going to take, but they're not going to go the furthest they could today. But he will say it's an existential threat.
Do we have a coherent energy policy down in Washington?
Well, it's difficult because on one hand, the administration has released all of this oil from the Strategic Petroleum Reserve. They talk about how this is historic in what they've done, and they are talking to American oil and gas producers to pump more, given what is going on with prices and a global energy shortage due to Russia's invasion of Ukraine. And Russia, of course, is a third largest producer. At the same time, this is a president who wanted to be a climate president. They came in, they made a lot of executive actions to make sure that they were putting whatever they could in their stakes in the climate industry, and now they are dealt with the reality of higher gasoline prices. So they're trying to weigh both at the same time.
Which makes that visit to Saudi Arabia that little bit more embarrassing, Anne-Marie. So run me through things from the president's perspective. When will we see if he gets what he wants to see in August from OPEC Plus? What does that look like?
Well, in August, what the Saudis are saying is that they need to go back and look at also supply and demand of the market right now. One, do they think that the market needs more oil? Because remember, if there's more oil in the market, you also have to find a place to refine it. And right now, that's probably one of the bigger issues in the market, which is refining capacity. And then the spare capacity for that is in China. The second thing, of course, is that the Saudis right now are pumping a little bit under 11 million barrels a day. They could go to 12. The UAE also has some, but together it's a little bit under 3 million barrels a day. So it's not a ton that they could even give to the president if they wanted to. So it's a tricky situation going into the winter. And Jonathan, this is in America. It's going to be much more acute in Europe.
AMH, good to catch up down in D.C. on the latest. Anne-Marie, thank you. Back with us at the top of the hour, we get some housing data. I wanted to touch base with Mike McKee ahead of that. Hey, Mike.
Well, John, we've talked about this before, the impacts on the overall economy from housing. As you know, mortgage rates have been going up, getting nearer and nearer to that 6% mark again. And this week we saw housing starts drop. And then this morning we got a report that mortgage applications are down to their lowest level in 22 years. Hard times for housing indeed. And there's a gloomy outlook. The number you mentioned, existing home sales, comes out at the top of the hour, expected to be down over 1% after a 3% decline last month. We get new home sales next week. They bounced last month a little bit, but are expected to be down 3%. So what does it all mean? Well, this is something the Fed is keeping an eye on, because if we continue to see home sales drop, it means we're going to see jobs lost in the housing industry. I just picked home construction workers there. You can see they have only just begun to drop off. If that goes much farther, then, of course, this spreads throughout the housing industry, and it's bad news. You remember last week, Chris Waller said he's watching the homes numbers before the Fed meeting. None of the numbers that we've gotten so far are going to make him look for 100 basis points.
The question I keep getting, Mike, is when we start to see some of this show up in rents, and maybe show up in core inflation too in a more material way?
Yeah, unfortunately, it takes a long time because the way they measure these things is they ask you what you think your home would rent for. And at this point, that takes months to get in because people don't buy homes every day. So we're going to be looking at inflation from the home prices that are up for quite some time, although we will be watching the existing home sales and new home sales numbers to see if median prices finally start to fall.
Are you saying we've got to find a better way of measuring this stuff? Because I feel like that's been the story for a long time now, Mike.
People have been saying that for a long time, but they haven't come up with a better way yet.
Mike McKee, good to catch up. The data at the top of the hour. Mike will break that down with Guy Johnson and Alex Steele. Guy Johnson, no doubt, will be looking at what's happening in Italy, a real turnaround in the Italian debt market. Yields were lower, now they're higher. That's just one part of the recipe, one ingredient for a messy recipe for Europe going into tomorrow with the ECB on deck, Italian politics in focus, and the big unknown, how much energy comes from Russia into the continent. Up next, we'll get you the trading diary and count you down to a monster 24 hours in Europe. From New York City, this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
At 25 minutes into the session, equities down just a little bit. We're down 0.1% on the S&P. On the Nasdaq, we're positive, firmer by 1/3%. Just for a moment, it looked like Netflix might roll over. That's positive just about in the early part of this session. A little bit later, we get more tech earnings. On to next week. That's where your big week comes up after Tesla. We'll hear from Facebook, we'll hear from Amazon, Microsoft, Apple, all of the above. That's the price action. Let's get you to the trading diary. Existing home sales at the top of the hour. Mike McKee will break that down for you. President Biden discusses the future of clean energy at 2:45 Eastern. Tesla reporting results after the closing bell. We're still calling that a tech firm. Great decisions from the ECB and the BOJ on Thursday, plus another round of initial jobless claims. And finally, US PMIs rounding out the week on Friday here stateside. From New York City, looking forward to a big day in Europe tomorrow. I'll cover that with you. Thank you very much for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
was stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and well, space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely.